Alright, we're back. So essentially, we went over kind of, the TA, the consolidations, looking at nearly every single perspective on the trend lines. Essentially, we gave you the price action. We told you exactly what we're doing. We're longing Ethereum, and then essentially with Bitcoin, I mean, this is just what I'm doing. I can't give you advice or anything. And like at the same token, like you always want to long from a position of power. That's what we always talk about on this channel. And we got in a while back, and we're cost-based averaging on our position. Our position should have been massive, but I hadn't closed an Ethereum long as it like I had a small Ethereum long open, which drove up my evaluation on my entry price essentially. So we should be up like 5-10% from where I told you guys that we were going to start longing Ethereum. But essentially, I want to bring your attention to the monthly charts, specifically this candlestick right here. You have essentially, like I said, like on this channel, we're not going to perpetuate ideas. We're not going to say stuff that, everybody else is saying just to agree with them. I remember I looked at the monthly chart maybe a few days ago with you guys, and, we had the three white soldiers, and now this candlestick has come down relatively significant. It was higher than this candlestick previously. And I said, listen, guys, I get that other people are perpetuating this idea, like on the candlestick pattern on the monthly chart, that, there's an issue here, but I just don't see it. We had the three white soldiers, but then on top of that, you see that three white soldiers, each candlestick would be relatively proportionate to the next. And this candlestick right here is bigger than this candlestick, and then this candlestick was bigger. And so I just said, there's a lot of sentiment of a potential bearish scenario, and this is really what we're going to talk about going forward right now, is essentially what's the future for Bitcoin. Is 40,000 the top, things like this, and is there potential more downside for Bitcoin, like in the $23,000 to $24,000 range potentially? Some people say 25, 26, and essentially, I was confused because I had seen all these YouTubers, talking about the monthly chart, and I'm like, I don't get it. I don't get it. This looks very bullish to me. I mean, this is just, you're in an uptrend, you're in all sorts of bullish, chart formation. But so I guess the idea that they are talking about is that they're talking about a monthly close. And so now that you bring to my attention, okay, well, yes, this is bullish. Like, I was like, I'm not going against the grain. Like, I don't care if, the most famous cryptocurrency whoever's are saying that the monthly looks bearish. It didn't look bearish, and it wasn't bearish. What they're talking about is in the future, they're saying, well, what happens if we have a monthly candlestick close? But we won't. Like, this candlestick close right here is fine. This candlestick close right here is fine. And then the open essentially is if we were to close this candlestick. I mean, this is a morning star pattern. At this point, it is relatively suspicious. Or, there is this wick right here, and it is leaning more towards a reversal pattern on the monthly. Yes, that is correct. But essentially, all we would have to do to negate that idea is close and then move above. And it's like we're close. So here's kind of like all the ideas on the monthly. Essentially, like, yes, this is leaning towards more like that morning star reversal wick type idea. But to perpetuate that idea, you would need to have a close, and then you'd have to have a candlestick, not only wick down, but also you would need it to close on the monthly. So we would have to close this candlestick on the monthly, go all the way down, which is possible, down to these levels, and then essentially in a month not recover, close on the monthly. Because like some people are talking about this, and I get this, and at this point, when I was talking about it, the candlestick was up here relatively. It was a lot higher when we were talking about it on the channel, and I was like, I have no idea what you guys are talking about. like the biggest YouTubers, and I'm like, I don't know what you guys are talking about. But on this idea, now that we understand that they're talking about, potentially the candlestick closing, if this candlestick does close, it's really like, you have this idea playing out, which is relative. I mean, it is on the monthly chart, so it is substantial, but this is an indication more than anything. This is basically showing us in the charts that we had a lot of strength coming in. Oh, this isn't even it. That's my, target for if we broke out of that consolidation pattern. This is all it is right here. I mean, this is nearly a doji. This is nearly a doji candlestick. And so it just perpetuates that idea that, like, I'm not going to tell you guys a false narrative. I'm going to read the charts. I'm going to tell you guys what's going on. And, like, so, like, you just see me looking at the charts right now. I'm like, listen, guys, this is like a doji. It just signals indecision, if anything. If anything, this is just saying that this is good for altcoins because essentially the market, is going down and it's going up, and it really doesn't have any decision on, there's a fight between the bulls and the bears, and essentially this could create some massive consolidation patterns, is really what it's signaling. But other than that, what they're saying is that essentially you close this candlestick. Okay, let's say we close this candlestick today. Then if we close this candlestick today, then we, have a bullish pattern. Essentially, you have an uptrend, you have this continuation of essentially the three white soldiers. Like, it's a bullish continuation pattern essentially, or well, this specifically is indecision, but this isn't necessarily bearish. Some people say the monthly charts are like an indication of potentially the bull run coming to an end. Okay, so if that is the idea, you'd have to have this close right here. And then you would have to have like something like a bearish engulfing candlestick, or at least to start to get the idea of bearishness on the 50, you would at least need to see 50% of this candlestick, if not like 50, and then a possible trend reversal according to the Fibonacci retracement. I mean, we can pull it out. Let's see. But I want to go over these ideas with you because it's floating around this space, and it's really just not. It's not what they're making it seem to be. It just seems like there's a lot of FUD. And it's like, I'm thinking to myself, are like these YouTubers being paid to manipulate the price along with the institutions? Like, because like they're saying stuff, but like it's not really backed up by anything. Like, it's not really. Okay, so I'm going over the ideas with you on the textbook pattern. So essentially, we have the swing low to the swing high on this candlestick on the monthly pattern. Now, textbook, if you look at it, essentially right now we've fallen below the golden pocket accumulation zone. That's fine. Essentially, to have an idea of a potential reversal type scenario, essentially like this is like, you have this blow off top, and then in a bullish continuation, you would usually bounce off of this golden pocket Fibonacci retracement and then continue to move higher. Okay, well, we didn't do that. So then essentially this is the next support, like a zone of resistance. And while we're not respecting that area right there, we've broken through it multiple times. We take a look at this area right here. This is the next area that we would be looking at as potential support to negate that idea of potentially a reversal type scenario. And that is at 28,967. So potentially the price action could come all the way down here, bounce off of this support area and continue higher, and we are not in a reversal type scenario according to the Fibonacci retracement, which would be an excellent it's Fibonacci on the monthly chart, so this is definitely substantially irrelevant. It just seems like they're about to pump altcoins. It seems like, the entire space is almost like manipulating the price to consolidate because nobody really wants to sell. I mean, am I going to sell Bitcoin? Let's say that, for some crazy reason that these guys are right and that 42,000 is the top. It's never going to be the top because Bitcoin's price is like or not genetically, it's encoded into the system that it's, a finite asset. And people think that Bitcoin is like a solution looking for a problem, and a, it's a solution to the problem of the current economic system. So that's a lot different than, like people think that like, okay, like you made this blockchain technology, but what's the use case? Well, the use case, is to hedge against our current financial system. And so the implications for that as time continues, as people, look into and get educated on things like Bitcoin, as the system continues to have, like for example, I mean, look at the validity behind the stock market and the credibility behind it when people like Wall Street bets are heavily manipulating the market. Do the billionaires really want to put their money into that? Do they really want to put, leverage on that? Or do they potentially want to get into something like Bitcoin? It's a legitimate, as the system, as things like, when you look at real estate, for example, when people get foreclosed on, I mean, essentially nearly everybody in the real estate market that's retail, they're essentially all leveraged. There are very few people that own their house outright. Most people have mortgages, and most landlords have mortgages. And, I know this because, we've been involved in real estate. And so, when you have something like, there's the unemployment issues, there's all that kind of, relief funds. And once you have those relief funds, like at least temporarily, like, you talk about unemployment, you talk about like all these different things. Once these things start, they're coming up to their limits. Once they hit those limits, and essentially people can't pay their bills anymore, which is this huge idea that we're potentially looking at. You're going to drive a lot of the housing market onto the market. It's an artificial supply dump, which you're just not going to see with Bitcoin. I mean, yes, people are leveraged in Bitcoin, but the vast majority of Bitcoin holders are not leveraged. MicroStrategy is not leveraged in their position. He was talking, I think he took out personal. I don't think it had to do with the company. I've never, I've been following MicroStrategy, Bitcoin accumulation since the beginning. And I think he was talking about, isolation between margin, basically, so you don't have a liquidation level and you're reliant on like taking out a loan that's isolated by time instead of margin on like a, putting up your capital as collateral. So like I'm nearly positive that, but like mutual insurance, like they're not taking out loans to buy Bitcoin. A lot of these people that are buying Bitcoin, they're not leveraged in their Bitcoin positions that they're holding. And, and like I said before, and people always ask me, they always say like, how'd you know? How'd you know about cryptocurrency? And I always say it was just such a ridiculous no-brainer. But like when you really break down the fundamentals, and I'm always breaking down things to you. Like for example, like Bitcoin. Like what's a good reason for holding the asset Bitcoin as opposed to something like real estate or stocks? Well, you get global diversification, and when China is becoming a superpower, you get that global. And then obviously I talked to you guys also a few streams ago. I told you guys. So I mean, I guess what I'm alluding to is if 42,000 is the top, it's the local top. It's not going to be the top forever. There's no way, because it's not possible, because it's not like these other markets where we see supply and demand and try and factor it in on, like with real estate, for example. You would go to the real estate, like I forget what they call it, but what those realtors use, that site, and basically you would look at all the available houses for sale, and then you would look at all the available buyers, and that would be the supply and demand. But those can be artificial, and it's a lot easier to see supply and demand on something that's, how many, essentially of the in demand asset do we have? We have the fixed number, and we know exactly how many are on exchange. And we were talking a little bit before about gold manipulation, and it's a lot harder, but with CMEs and with derivatives markets and with the ability to leverage crypto assets, that manipulation of markets does come into play. But it's nothing like gold. It's nothing like trying to find the supply and demand of real estate. And then obviously, like I was saying before and alluding to, as people's incomes are cut off because of the current financial situation, the government has to print more money. They have to print more money. Like we talked about ending the Fed, and I was very big on that. That was, and nobody was talking about it, and that was years ago. At this point, it's too late. It's too late. You end the Fed now, and the entire system collapses. The whole thing comes down. Everybody goes out of business, and so they know. That's why they're printing money. That's why they're saying helicopter money. They have to. And as they continue to print more and more money, they have to print more and more money. And as they print more and more money, they have to print more and more. And so now you understand like why Bitcoin is a hedge against inflation, and it's not a solution looking for a problem. It's the solution to the problem of the current economic situation that we're in. And so, like when you say to when you bring up this idea that 42,000 is potentially the top, it's the local top, relatively. The next 3 years, like no matter what, I have so much money in Bitcoin. I'll bet, whatever. It doesn't matter. I'll bet whatever. I have, a lot of money in Bitcoin. And, what I did last night is, there's too much risk for me to be longing Bitcoin right now. I took, like, I don't even want to say how much money, but for most people, for most Americans, it was like you could buy some cars with that amount of money. And I took it off of exchange, put it all in my ledger, put it in my safe. So I don't care. I have a small amount on Coinbase that I have transferred over. So if we do get some like massive wicks up, like if we break out of consolidations, I can sell like 5 to 10% of my portfolio. But I don't care about $42,000 Bitcoin. It's like in 20. It's like, it's like just such short-term mindset thinking, oh, well, 42,000 is the top of the top. It's the top for like the most extreme situation. Unless you were to like EMP the entire world, and even then there's still Bitcoin miners. It's like you guys have to understand Bitcoin is here to stay. Like there's very little that somebody can do to wipe Bitcoin out of the entire planet. I've already talked about, Bill Gates, these guys, they don't even have the money that they say is in their net worth. Like, yes, they have those net worths, but that's the current evaluation of their companies. Like, for example, you talk about Warren Buffett having over $100 billion. Well, that's the valuation of his company, Berkshire Hathaway. That's not liquid capital. It's not like these billionaires can just buy $100 billion worth of supercomputers and do an attack on the Bitcoin network as it continues to perpetuate, as it continues to cash flow these business models of these crypto miners. And as like I mean you see the growth in the last 3 or 4 months. Bitcoin went from like 11,000 all the way. I mean these miners are extremely profitable, and they just keep rolling over their profits into more and more mining rigs. And the more and more mining rigs that they accumulate, the more and more decentralized the network becomes. And so as long as the network doesn't go down, which it's nearly impossible at this point, and like just as every single day that goes on, every single day that Bitcoin price doesn't go to drop down to like 10,000, I mean it just becomes stronger and stronger, and you get this idea of essentially, I'm not selling. I have so much Bitcoin. I'm not selling at 42,000. That's insane. Let's say it does drop down to worst case scenario in the teens. I'll just buy more. Like, why wouldn't I? Like, because it's like it's exactly like this. Where are you gonna see like a nearly guaranteed 100% ROI in the next like year? You know what I mean? Where are you gonna see a 100% guarantee? Like literally every single asset class has risks and rewards. And when you look at something like real estate, and you look at the rise and trend in natural disasters, like that's more realistic, that there's a hurricane that wipes out, your real estate portfolio. There's a war that goes on, with the United States being the home front. I mean, I don't know how familiar you guys are with being situationally aware, but the United States, is switching to EV. They're pushing all these EV agendas, which is really upsetting Russia, which is one of the biggest producers of oil, and there's massive tensions. And that Putin came out and talked about this, And so there's so many like global tensions. I mean, that like going to war with Russia is a lot more of a possibility than Bitcoin network being destroyed. And if Bitcoin's network isn't destroyed, it has built into it, the fundamentals with our current system to generate massive returns regardless of any like sort of market manipulation. I mean, you can have FUD stories all day long, and that's all they are. And once those play out, even if there's some massive FUD story and the entire United States wipes out of power, as long as you have a secure exchange, or as long as you have your money on your ledger, and potentially, even if we get hit with an EMP, you can buy for $30, you can buy um, a little case so that you can put your ledger in your EMP case and it won't get EMP'd. And that's just not something you can say about real estate. We go to war with Russia potentially. I'm not saying that's going to happen. I'm saying that's more likely to happen. And the United States doesn't really realize this because they've never had a battle on their home front. But if that is the case, a lot of houses are going to get destroyed. And unless you have like Russian like military insurance where a Russian tank blows up your house and you're insured, then you're going to lose your massive investment. Stock market, nothing's guaranteed at all, especially with like derivatives and the liquidity crisis, and I get it. The liquidity crisis, isn't very relative, with, the bank switching from fractional to no reserves. Like there's a lot of uh, future liquidity coming into these markets to prop them up. But at the end of the day, you're having an over evaluation on something like Apple, whereas Bitcoin is a currency and there's no intrinsic value in and of itself, like as far as like an evaluation on a company, which you would think is a negative, but as they print more and more money, it's going to be a positive because essentially you're going to have an over evaluation on things like Apple, where you have the exact same amount of employees, you have the exact same, ROIs, you have the exact same protocols, but you're artificially pumping the price because of to hedge against inflation, and it's going to make less and less sense. And I mean, the amount of money it's going to cost to get into these stocks are going to be substantially higher, and so, it's a barrier to entry among other major risks, associated with leveraging that many resources to that specific asset. Whereas Bitcoin, the number is arbitrary and relative. It's more so relative than arbitrary. And so, Bitcoin can go up to 100,000. And at the end of the day, if the market, if the supply and the demand is there and such, then it's not overly extended. And that's just something that people can't comprehend right now. So, when we talk about market bottoms, we're looking for that. But when we talk about market tops potentially on the monthly chart, let's say that we do close and we do start to print we close, wherever, and then as we close, we continue to move lower. I'm trying to think, like you would have to have like a monthly close like right around this area, and then essentially right after that you'd have to have the candlestick continue to go down. And if that was the case, then essentially you would have a bearish engulfing candlestick and an idea for further downside. But what you have to understand is, like, even if we do, you know, it's just so bearish, or it's so bullish on the monthly chart. It's hard to even comprehend this. But essentially, if we were to come down, make this extremely small candlestick, and then open a new candlestick on the monthly, and then continue to go down, perpetuating that bullish engulfing, it's not confirmed for an entire another month. Okay, so it's just an idea. So, there's a lot of, is 42,000 the top, and a lot of, it's extremely unlikely. But on this channel, you weigh out the possibilities and the rewards and such like this, and, even if that is the case, Ethereum is still extremely underrated and has the potential to pump. So even with that potential scare, putting the long that we have in Ethereum right now is a total game changer, because no matter how Bitcoin consolidates and comes down, Ethereum will pump because it's so massively underrated. Um, and that's not financial advice. That's just what we're doing on the channel. So I am taking this, seriously, and I did take, my entire portfolio of Bitcoin specifically, and I put it on my ledger, besides the small amount that I have on Coinbase, which is about, I think I have 20% of my entire Bitcoin portfolio on Coinbase, and essentially I have plans to sell it at like 70,000, 80,000, 90,000, and like small percentages as we continue to move up. But you might be asking, like, well, what happens if we don't hit that? What happens if it's a top? And I just explained to you, it's like this asset class. I mean, the potential behind it, just with the institutions alone backing it up. I mean, people wonder why I was telling people to put their life savings in at 11.55. When Bitcoin was 11,000, I said, because you always have to look at it like this. It's risk to reward. And so essentially, if you're going to sell your Bitcoin, you would potentially have to put it into something else. Where are you going to hold it in? The DXY? Well, we still, somebody was saying that the GameStop short is going to collapse the entire economy, and that's just not true, because they can literally, the Federal Reserve doesn't actually print money. They have a balance sheet just like any other entity, and they have an asset and a liabilities column, and they add what's called the letter I, and then O, the letter O, and then U. They're called IOUs, and it's like IOU, like money essentially. And essentially they borrow money. A lot of people don't know about the United States debt. In the United States debt, how we have debt, it's accumulated through the people. So basically the United States citizens lend out to the government loans essentially, and these are called bonds. And so for the entire economy, because people are talking about GameStop shorts, like uh, destroying the entire economy. The main issue is the bond market, if there was an economic entire collapse, where essentially it makes more sense to hold your United States dollars and to not lend them out to the government entities, like the Treasury, and like um, but so you would have to have bonds return negative interest rates. If bonds return negative interest rates, if it costs more to buy a bond, then essentially people are going to stop lending money to the government, which makes it hard to borrow money, which is essentially what the government is doing when it prints money. Printing money is, I don't want to say degenerate, but it's the mainstream word that's not the fundamentals for how it's actually created. But essentially, when people say that they have that whole GameStop thing, and they say the entire market is going to collapse, and it has a lot to do with like the liquidity and derivatives market. And yes, the derivatives market is absolutely massive, but they can literally just print their way out of it. And you obviously see the SEC taking a massive favor to the hedge funds by, essentially punishing, and closing out, GameStop, and like on things like Robinhood. And so you obviously know that, from this, type of favorism, who they're favoring, and the fact that if there was to be a liquidity crisis on the derivatives market, that they would supply it. And essentially the main thing that would be stopping them would essentially be the Federal Reserve's ability to back the banks, which is what it's designed to do. The Federal Reserve, not a lot of people know this. There was issues previously, in history, where J.P. Morgan had to step in and save some banks from going under, and there was a lot of banks going under, and that was an issue. But now post 2008, post 2009, we have essentially the Federal Reserve, one of its main duties is to back the banks from going under. And so the you would have to have like what I'm saying is you would have to have a liquidity issue where people are not incentivized to buy bonds for the entire economic system to collapse. Because if nobody was buying bonds, then essentially it would be harder for the Fed to create money, which it doesn't actually create money. But and then essentially because you have like unlimited printing presses, I guess is how you could say it. You can lend out unlimited money now with the banks. It used to be a fractional reserve lending system, which was on a 1 to 9 fractional reserve, which essentially is the banks, if you bring in $100, they can hold 10 of those dollars and then lend out an additional 9. Now they don't have to reserve anything and they can lend out everything. And that, perpetuates because, I don't want to really get into that. But so essentially, you have the idea that people are talking about the entire system collapsing. There's too much juice in the system. Like once you understand, you have the DXY, which is the dollar index, and essentially that's the buying power that essentially one United States dollar has. And people wonder, what is the factors that dictate that buying power percentage, and it has to do with QE and QT. So QE is called quantitative easing, and that's what the mainstream understands as money printing. And then you have QT, which is quantitative tightening, both of which the Federal Reserve still has a lot of room. And then on top of that, you do have lowering interest rates, and while they're near zero, you still have a lot of room to go negative. And that's an idea that we've been talking a lot on the channel. So there's a lot of room still. I mean, lowering interest rates and lowering interest rates, and then QE and QT, those are both still available tools to the Federal Reserve. So to say something like the entire system is about to collapse, it is going to get exponential to the point where they're going to have to constantly print money to keep the system afloat, but they still have those tools available to them currently, all of which are good for Bitcoin. Because essentially, if you do have negative interest rates play in, and the Fed has talked about how they don't want to do negative interest rates, but it seems like it's just going to be delayed. And negative interest rates is really what you hear about when you talk about universal income, where essentially there's a lot to it, but essentially it costs you money. It would cost a person money storing their money into a bank. You would be charged interest for holding your money into a bank account, and then essentially it would negative interest rates. So like interest rates is the amount of interest you pay on money. Like when you go to a bank. So when you go to a bank, they would essentially be giving you money to borrow money, and this would exacerbate the current equities market, and specifically assets like stocks, something liquid. And so it would artificially exacerbate the price, and this is something we could see in the future. And kind of my point on intrinsic value, where you see asset prices going exponential, like for example, like I've said before, you have the current evaluation of Apple, and again, regardless of all the money manipulation, Apple is still going to remain as a company. They can't print more people. They can't print more, ideas. Like, Apple of and of itself is, its current evaluation. And, when you exacerbate the equity markets with something like negative interest rates, encouraging people to take out loans to increase their buying power, incentivizing them to speculate, is essentially what would be the case. You have unrealistic evaluations on a lot of these assets, and the potential for defaulting on loans. and a potential exponential crash. And so when you look at the evaluation of something like the housing market, which, like we talked about before, with supply and demand, and when we talk about, the equity markets with real or with stocks, and that unrealistic evaluation. Whereas you look at the arbitrary, or relative is the word I like to use with cryptocurrency, the relative evaluation of it. The fact that, people say it doesn't have any intrinsic value. Well, that's kind of the point. It's not tied down to a specific company that it has to deal with an evaluation. Think about it like this. If you have everybody leveraged out speculating because of negative interest rates, and potentially there's some bad news that comes into Apple because it is susceptible to these kind of market, fluctuations, because there is a current evaluation on the underlying asset. Essentially what you have is the potential for a market scare, and if people go negative and they default on those loans, and the market is mostly propped up on those loans, you would have a massive correction. Whereas something like Bitcoin, you don't have that underlying, there's no real news with Bitcoin. It's all hardwired into the code. It's all running optimally. Like I said, even if the entire United States was to go into a power outage, it doesn't matter, because Bitcoin is not reliant on something like that, because overall, it's still going to be a safe asset, because it'll just be a little scare, and then after that little scare, the market will bounce back, because there's massive, like, the United States has like nearly no on the large scale, nearly no mining computers, because it doesn't make sense in the United States to run massive mining rigs because of the electricity cost. So like something substantial to happen to Bitcoin, like potentially something like that, it's still so. I hope that makes sense as far as like why I'm not selling at 42,000. Essentially, you have to look at the risk and the reward scenario for every single asset, and the potential for those assets. So if you were to sell your Bitcoin, what asset would you put your money into? Long term, obviously the DXY can only, they have tools available to them, but negative interest rates would be potentially, and this is in the future. And this is what I say, like in waves, like especially with with the idea of like derivatives markets. It's like, it's not like the stocks are just going to go up forever. There's going to be times when they don't get the stimulus bills out in time, or there's going to be times where they're trying to just ease out and wait till the last second to do QT. So they can't just do QT, quantitative easing, every single second. There's going to be times where they're trying to do QT, QE, and then also those negative interest rates, that's going to manipulate the market. And so potentially just having negative interest, like it's going to be on cycles. Like they're going to wait to push negative interest rates, and so essentially, the markets, the equity markets, are going to move in sort of cycles. It'll be relative, to its price, until negative interest rates come substantially, when they have to prop up the markets. And then, the equity markets are nearly going to explode, because there's going to be more capital and more incentive, specifically to speculate. And then potentially, once those speculations, collapse in on itself, because there's fundamental, to the underlying asset, and essentially like a FUD type scenario, or, essentially an artificial crash, not necessarily based off of the underlying fundamentals, but because of the way the system's set up, where people default on their loans because there's a correction, and that would cause a wave, and then it would come back up, because the evaluation of the company would be substantially lower, and the incentive to borrow money would be very high. And so, like, this is, in the DXY, and a lot of different other assets, this wave almost theory of how the current, like, economy is going to go moving forward. And there's this idea perpetuating that possibly we're going to go off of the credit-based, debt-based system that we're currently a part of. And that's just not That's just not in discussion right now. What is in discussion is the digital dollar and the fact that, right now you see paper money, but once it becomes digital, as money continues to inflate, it's going to become almost surreal. You're going to see a lot more money in your bank account, but it's not going to be worth as much, but it's almost just going to be like when you swipe a credit card, you look at the money and it's not as substantial. It's not like when you go to the grocery store and your bill's like $100. You're not actually pulling out $100 bill. You're swiping a credit card, and so like mentally, it's not the same. It's less mentally like what would be the word? It's you just don't think about it as much. You just mindlessly swipe your card, and so essentially like with Bitcoin, like essentially we're looking at these prices. 42,000 is like being the top for this bull market is nearly impossible just because of all the institutions backing it up, the supply and demand crisis, and like the underlying factors of that. But what they're saying to perpetuate that idea is the monthly close. And if you have this monthly close right here, or potentially down here, and you get the bullish engulfing, you still have that supply and demand issue. People are going to be buying at these levels, and it's like when I say like you don't want to just understand TA, like you don't want to just memorize TA, you don't want to just memorize technical analysis. You want to understand the fundamentals behind why a lower low is significant or a higher high is significant. And one of the major significant things between an immediate lower low potentially in something like a uptrend is there's going to be a lot of buy orders. And this is the idea, I don't want to say that we're 100% right on the channel and we literally called the exact price action and, called the exact market sentiment against everybody, but we did. I told you guys that if we did come down and broke out of that consolidation pattern, that we weren't just going to tank. Next episode, I'll play it. I just didn't have time to find it, but I'll play it next episode. And essentially it's the same idea. Even if with the FUD scenario, essentially there's going to be a lot of buying pressure as we wick down because there's going to be a lot of limit orders stacked up in those areas. Now, am I going to be longing Bitcoin? We'll see on the market, but I just don't see an opportunity. And again, whenever you're making any sort of investment whatsoever, there's going to be risks associated with that investment because the world is obviously extremely dynamic, and we've talked about risks multiple times. Like if you're in real estate right now, an artificial, supply dump where essentially a lot of people default on their mortgages, and there's the argument that nobody's going to default on the mortgages because the Fed's just going to back. Well, that is a possibility, but the potential that people do default on their mortgages because a lot of the Republicans are saying that, and I'm not getting into politics, I'm just telling you what's going on. A lot of the Republicans are upset with the loose spending, and that's a major idea playing in right now to the scene. So we'll see what happens, but potentially people defaulting on their mortgages, the supply opens up, and then essentially housing market prices fall because of obvious supply and demand. Like, why pay more for a house when there's a bunch of other houses on the market? There's more competition, and essentially the buyers have the upper hand because they can just go to somebody else and get a better deal. That obviously causes the price. And then also, you have those current evaluations and people trying to get equity within their properties getting appraised by the bank. So essentially, they like these bigger companies like per se Cardone Capital or some of these massive real estate companies which hold besides retail, some of the most significant like they occupy some of the most significant, contracts, whatever you want to say, within real estate, and potentially they're looking to get those properties appraised for an evaluation. And if the market, is down or trending down, they can't free up equity. That gives them significantly less buying power. Because essentially what they do, what they love to do is they love to buy an underappraised property, put a down payment on it, get a higher valuation on the price, and then essentially use that as equity to do what's called a HELOC. And a HELOC basically gives you the ability to take out a loan against your equity in your current property. And so that's one of the ways that they exponentially accumulate. How you see these, companies that are worth, these real estate companies that are worth $100 million. They used different, and this could potentially be, as they say, as Rockefeller's economists would say, these are the benefits to a debt-based, credit-based system, the exponential growth. But obviously, that would not be the case if there was an issue with, and that's kind of the thing with like real estate that people don't understand. I always say it. I always say it. Everybody's an expert in a bull market, but then the second that the money stops flowing in, everybody panics and they don't have the evaluation. And I mean, a lot of these realtors, a lot of these real estate guys, they don't have the economics background. They don't have, the macroeconomics background to really sit down and look at, the market, and then that's just going to massively burn them when they're overextended on leverage on their mortgages, things like that. And you say, oh, well, real estate companies don't have mortgages. That's just like a ridiculously ignorant statement. Like, we're not going to get into real estate, on this, maybe, if something looks appealing, but like I said, I'm just talking about, risk to reward scenarios, and I'm telling you guys that, like, let's say you take your money out of Bitcoin, put it into real estate. There's risks associated with that, and the rewards, leveraged or unleveraged on Bitcoin versus the risks are significantly better just on Bitcoin alone. And then you guys obviously know how massively bullish I am on Cardano, and it kills me to see the price. I've been accumulating Cardano for a long time, and nobody really had an evaluation on it. It was trending in the lower like 26 cents like for like the longest time. I don't remember the exact evaluation on it, but the fact that it keeps going up higher and higher. Like, I own like a lot of money in Cardano, and like you would think I would be happy that it continues to go up in its evaluation, but I just want to accumulate it more because it seems to be by far, the industry standard for this whole cryptocurrency venture. I mean, any sort of new technology that you put out into cryptocurrency, any sort of, because like when you get really deep into cryptocurrency, you start to see that they're not, you have Chainlink, you have Polkadot. Like, yes, Polkadot, Cardano, Ethereum. Wow, these are massive. These are some of the biggest. These are like Apple, Google so far. But like it's like the reason, like one of the reasons why, out of the many massive reasons why I'm so bullish on Cardano is it's a third generation cryptocurrency. And essentially, if you have fourth generation cryptocurrencies, the fact that they can be built on Ethereum is massive. Or not on Ethereum, on Cardano. I mean, they could go on Ethereum, but Ethereum's gas fees, and they say they're going to fix the gas fees, but that's speculation, really, more than anything. But really, it's the accessibility and the fact that its current market like capitalization, the fact that its appraised value as the second highest cryptocurrency, as the market cap of it secures its position and makes it less risky of a position to get into, kind of like the S&P kind of argument. So the money will flow into Ethereum, and that's why we do hold a lot of Ethereum, even though Cardano is. I freaking love Cardano. I don't know, how much is it up since I first started talking about it on this? When I was talking about it, like in general, like on social media, oh my gosh, it was up like 200, like something crazy. Since I started talking about it, like I was accumulating before then. I have like portfolios that I have where I was accumulating, and it's up like 300% since when I started buying it, which is relative. Bitcoin is up, 400% since I started really accumulating it. And I always get this thing in crypto and the noobs. It's like, and it's really just the noobs to investing in general. They always say, imagine if you would have got into Bitcoin at $100. Well, yeah, but here's the thing. That's not really an investment. That's a speculation. There was nobody backing Bitcoin. That the code was there, but the incentives, really one of you talk about the evaluation of Bitcoin and the risk to reward, and that's kind of the entire argument. But so you look at something like that when it's $100 and the community, Bitcoin's community is just not there at $100. Like the awareness of it is just not there. The fact that if this doesn't take off, it's the fact that its current evaluation is so massive, and the fact that Michael Saylor said it, and I think after this bull run, regardless, it'll consult this point of cycles and the market cycles that cryptocurrency seems to find itself in. And I don't know if the cycles will continue forever and be a self-fulfilling prophecy, or if they will go up to its appraised current value. But the reason it's going up so much is just it's so massively undervalued compared to its competition. But essentially, one of the major things that makes Bitcoin valuable is its community. The fact that people know about inflation, the fact that people, are concerned about inflation, this is a solution to a problem. And, it wasn't exacerbated as much, like once we had the stimulus package, this is really when Bitcoin, really started to take off, like essentially, and, that's a large portion of it is the use case of it just becomes exponential when you think about $1 trillion stimulus package getting pumped through the banking system. Yeah, it's $1 trillion right in the gate. And then essentially, if somebody takes, their $1,000 stimulus check and then they go and they get a loan, let's say a car loan or whatever, the bank's going to lend them out an additional like $9,000. So that's essentially $10,000 coming into the economy that wouldn't potentially have been there. And so it's really not a $1 trillion stimulus package. It's more like $100 trillion stimulus package once you understand fractional reserve banking, and then once you understand no reserve banking, where they're just going to continue to print money, and potentially deleverage isn't the right word, but essentially, break those ties between the money printing and the banking system. They used to be relatively correlated, whereas then when you created more money into the system, like by, the IOUs with the bond system that we talked about, once that does occur, then it gets pumped through the banking system. So the Federal Reserve is part of the banking system. It's the central bank, but the banking system, when I refer to that, I'm talking about the commercial banks like American, Bank of America, Chase, like those kind of banks. They exacerbate the currency and inflate it because essentially they loan out that money that was created, in part. And, again, I don't like to use the word create, but I just hope that that helps you understand what I'm talking about, because that's what the mainstream likes to call it. Creates the money and then it gets pumped through the banking system, which is, those commercial banks that we're talking about with that idea of fractional reserve lending. And then essentially on top of that, they charge interest, and so they take your money. So they take it's this crazy idea. Essentially, you have this pump, the banking pump, where you have, like, let's say you go and you have $100 and you deposit it, and then in the old system, it's even worse now, but in the old system they would give you 900 additional dollars, and then if they charge you 9%, or if they charge you 10% on that $900 loan that you got, and you're putting up $100 of your own money, capital, and then they charge you 10% on the 900, then you're essentially paying $90, almost 90% of what you initially put up, and they're essentially providing no value whatsoever. So I mean, in the Constitution it says that inflation, or not inflation, that that's people wonder why Abraham Lincoln was assassinated, it has a lot to do with the greenback, the fact that he created money that didn't have an interest on it. The greenback was specifically because he knew about the economic system, and he didn't want to, I don't know, screw over, the American people at that time, forcing them to pay massive interest rates on the money. So he created the greenback, which essentially, was like a government, and he had the power to do this in the Constitution. Most presidents have been too fearful to do things like this. You have John F. Kennedy that started to mess around with the system. I believe it was Executive Order 1110, which he was, trying to fix the, what was it, the silver market. And you guys know how that went. And, who was it? And you say, oh my gosh, this conspiracy theorist. I mean, and it's not, because look at Andrew Jackson. He was attempted to be assassinated for shutting down the second, because like I said before, there's been three there's been three central banks tried in America. The first one was, the bought out, what was his name? It was like who was that? He was like the only founding father that was like massively perpetuating the idea of a central bank, and everybody was like, what are you on about? Like, we don't want that. Who was it? I forget his name. Something like Madison, Hamilton or something like that. Madison, Hamilton, something. I don't remember. But he was, perpetuating the idea that was the first one, and then the second one got created, and then essentially Andrew Jackson, and it's all in history. It's all history. It's not conspiracy theory. It's all written down. Like, it's all very well, accepted fact that, the person that tried to assassinate Jackson, Andrew Jackson, his gun misfired when he put, a double barrel pistol. He had two pistols and they misfired, and then he was captured. The assassin was captured, and they said, like, why did you try and assassinate him? Like, they captured him. They captured the assassin that had its gun misfire, and they asked him, why did you try and assassinate me? And he said, because, you were like trying to end the banking system or whatever. And I mean, it's always been, like, fractional reserve banking was a illegal practice for the longest time. And the people that got ahead, like JP Morgan, were the people that illegally conducted those kind of business practices. Then as they came up in the system to legitimize it, what ended up happening is they ended up paying lobbyists to lobby the bill to get fractional reserve banking passed in our system. I mean, these aren't conspiracy theories. This is history. Just look it up. It's all like public information that's very well like understood and accepted. It's just you constantly get fed narrative, go to his story, whereas it's not that these facts are not out there. But so essentially, what was it exactly? So you have the central bank idea. I don't remember exactly what I was saying. I got way too deep into it. But essentially, what was I saying? Something about the central banks. But I mean, look at this massive idea right here. I mean, it's literally consolidating between these 2 points right here. And volume does look like it's trending upwards, but this is on the monthly, so it's only relative. Was my connection still good? Is Bitcoin going to rise to 36, 37, then dump to 20? Okay, so let's look at that idea. Let's see. 36. So what's your predictions? Okay, 36, 37, then 27. Okay, yeah, I mean, 27 seems to be the conservative target. let's see. Potentially. Yeah, I mean, yeah, that's definitely an idea. Potentially, you have, so you have these two ideas right here. I don't know why it won't let me zoom in more. I guess I'll go to the daily so we can look at it better. But potentially, I don't know if you mean like just 36 in general, but it looks like I can give you more specific resistance targets that we would potentially be facing. But yeah, I mean, you look at on the daily, I mean, yeah, I mean, it seems to be more consolidating than anything. So I mean, but like, so like in terms of like altcoins or something specifically like that, that would be things to look at is like we're consolidating, but then eventually where would we hit? And essentially the major ideas that we're looking at right now are, let me exacerbate these points, very important. Okay. Okay. All right. So potentially we do have, the relevancy of this consolidation pattern right here, which does have valid touch points. Potentially, we could find resistance about at 34,479 potentially as an area, because when you think about this area right here, it has the valid touch points of those. I believe they were on the wicks, and so when you have this valid consolidation pattern, even if it breaks out either way of the consolidation pattern, you still have this trend line because essentially those wicks were creating that trend, and this idea extends basically the trend. And for Bitcoin's price to essentially break that trend, you would have to either go above it or, well, yeah, you would have to go above it to break the trend. So essentially, we have this idea, exacerbating this smaller consolidation, but it's also relative. So you have that idea relative, but like you have that idea, and it is relatively important, but relatively speaking on the charts, when you look out, you want to see more of the macro patterns and really where is Bitcoin most likely trying to follow. Like what are the most relative consolidation targets to be looking at? Not that this isn't a substantial area, but it's moving more so up into these levels right here. Obviously, you see the VPR, and this is on the daily. So I mean, right here at 34,496, you have a lot of VPR. So potentially we could hit this level, get rejected. And the interesting thing is you have this idea, like right around 34,461 of essentially where the VPR is. And you have that downsloping trend line right there, both acting as potential resistance. So, what's going to happen when we get there? It's consolidating right now, and we'll see. There's not a lot of buying pressure. There's not a lot of selling pressure. So we'll see how the market reacts, if it just breaks through it or if it finds it as resistance. So that would be the first discussion. If it does break through there, this is potentially nearly, you can think of this nearly as a what is it, a channel, like a trading channel. So there's a lot of resistance as you go up and hit these levels. So 30,403, 35,700, all these different areas. And then more so the major, like what you were talking about specifically, is more so like the idea, like what I'm saying is these are relative in the sense that they still are relative, and you can't discount these as potential stopping points for to potentially, at least in the short term, find resistance at these levels, if not entirely negate the idea of continuing going up if the buying pressure is just not there. But if we were to get through all these different levels, and obviously, you can see for yourself that there is quite a bit of trend lines basically against the idea that we're going to go up. And a relatively high amount of VPR support. But if we were to negate all of those ideas, which these all have to be factored in, then essentially like um, it wouldn't be like 36, 37. I don't know exactly what you meant, but like the exact target that we would look at for a potential resistance area would be around 36,659. Now, if the daily candlestick was to close, because right now we're on this daily candlestick, if it was to close right here and then like relatively anywhere, but if we were to continue to consolidate like what it seems to be, and we were to consolidate within this pattern, and we were to close, we would potentially come up right here and then potentially find, resistance at around 36,433. So it's not necessarily that we're looking at potentially, like moving averages or things like that. It's the candlesticks and exactly where they're going to hit on the trend line. And so it just depends on when exactly we hit this. And I would say that I'm leaning more towards, 36,415. And the only reason I say that is because you asked for like predictions. And most of the time on this market, I just like to go over all the absolute facts. And then your other answer or your other question was, what do you think is going to happen? Are we going to get rejected at that line and then potentially um, move lower? And that's a good question, and it really just comes down to supply and demand and the market sentiment, which is what we always talk about on this channel. And some of the biggest, the best experts in the space will agree, so it's like, if you're trying to make a decision based off of that, maybe, you're asking the right questions. And really the only one that can answer those questions are the markets and the market sentiments. Like this is very high, away from, sentiments can change. And so just to tell you like, oh yeah, like it's looking so good, like we're probably just gonna blast through this. I can't do that. Really nobody can that has any sort of TA credibility. So yeah, I mean, to answer your question, like it just, you're looking at the right area right here, and essentially that's a good question. And really the only one that can answer it is the market. And if you're looking for a potential long or take profits or something, like in a long position, you're always constantly um, in like a risk to reward type scenario. Yes, so like you're like when you're longing Bitcoin, like whether you're on 5x, 10x, whatever, you have obviously the potential to go up. And then obviously you have the potential that you have risk and that you're going to lose money. And so essentially moving up to right here potentially could be, really what I would do if I was in this situation. And I want to give you the type of, not financial advice, but what I would do if I was in this situation, because I think that's only fair, is I would look at the market sentiment. If there's heavy buying pressure, if there's a lot of, good sentiment as we move up to these levels, I wouldn't take money off the table. But if we're consolidating, and the sentiment just doesn't look like it's there, then what I would do is I would take a little bit off the table to de-leverage, to de-risk. I think it's better to secure take-in profits than potentially, lose money, because yes, you do have those massive potentials to hit something like 53,000, but or higher potentially. We're getting bigger consolidation patterns, and we'll see what that tends, like what that outcome is like actualized as. We're not sure yet, but so potentially like 53. And I get that, but at the same time, you also, like you said, have the potential to go down to something like, if we were to get rejected off of this level, we have the potential to head down lower. So I would deleverage if the sentiment is not looking strong. And essentially, to answer your question, it's up to the market, but that is a very relative, point to where we're definitely on this channel going to be reviewing. And then essentially, if we did get rejected, you have this major idea that we get rejected right here and then come down to something like 30,000 and continue to find support. And so, down to 27,000, essentially, we have to see the buying pressure, the buying walls. Again, like I don't want to sound like a broken record, but that, and then I mean, essentially, right here you have a bullish engulfing. So the potential that, yeah, we do come up and hit this level, and then potentially get rejected off of it and come down. Um, 27. Um, Let me go over all the downside ideas on the macro charts, like to really go over this answer of 27. So essentially, like I said, like you want to see the buying sentiment down here at 30,000. This is 30,364. So essentially, you want to see, is there a lot of buying pressure? Are there a lot of whales buying? There's a lot of ways to look at that. There's a lot of exchanges where people will place limit orders. There's something called whale alerts on Twitter, and different ways of gauging. A lot of people have accumulation charts where they essentially show where whales are accumulating. And essentially, what we want to see this support area, not, yes, we have the trend line and that's valid, but also we have some FUD in the space. So essentially, to secure, like on this channel, we want to give best chance for success, and really the only way to do that would be to look at the accumulation right here, because essentially what you have right here is, the market comes down, it hits this level. Essentially what I'm saying is that you have all those limit orders that were at 30,000, you have them filled all the way right here, you have them filled. So essentially, you're coming down a little bit lower, although there is a wick right here. So essentially, a lot of the limit orders that were at 30,000, they got filled. So is Bitcoin going to come up, and then are there more limit orders potentially to get filled to negate this idea? So that would be, something to look at. Is the buying pressure significant here, and are we going to get a bounce here, or have we basically broken this type of, other than the trading, other than, the relevancy of this trend line, but the actual fundamentals behind limit orders right here. And if that is the case, if you come down right here, if you even wick slightly below it, you're gonna immediately bounce back up because of the limit orders, because these limit orders down here around like 29,000, essentially all those, down, infinitely, like none of those orders have been filled. So essentially what you would see if that was the case, you'd be looking for, this trend line, then you'd be looking for 29,896, and essentially this isn't like a resistance, or this isn't necessarily a support area. I mean, you do have this idea right over here, so it's not relatively a support area. Like it is, but it's not going to, like, most likely if it comes down to this level, it's not going to bounce. It's going to continue lower, and if that is the case, it looks like there's this moving average right here. This is on the daily, and this is the 50. So potentially as we come up, we could have this moving average, the 50, on this support line, which would be a very good idea for a bounce if that was the case. And then if we were somehow to have massive selling pressure, that negates that idea. And a lot of the FUD in the space, and I try not to perpetuate it, but a lot of it's been factored in, a lot of it's been priced in. It's like, I'm in like one of these trading groups for cryptocurrency, and there's some members in there that are just absolutely, some of the best traders probably in the entire crypto space. And like one of the things he says is, you want to see like the news, like you want to see like the news of crypto, look at the charts, and essentially like a lot of it's factored in already, and that's something that you learn in like stock. So like saying that like, oh, like this FUD like about whatever isn't factored in already, that's more so like perpetuating a biased belief that you're essentially right. Like you're like, oh, like this should have been factored in, and then the second it drops a little bit, you're like, oh, that's why, because of this news or whatever. Most of the news, most of the FUD has already been factored into the market, and it's almost like self-confirmation bias that people would have basically against the markets, that it hasn't been factored in correctly, and from both the psychological point of view and from, a technical point of view, that's just not correct. And so you potentially have this bounce idea, and then potentially, this would be, a major area basically, but because, like, I almost want to delete this, but I'm not going to, because it's still a decent area to be looking at, and we want to see it. But essentially right here, if we get a wick down here, essentially it could drive us down to right here, and because it's that idea of setting lower lows. And again, we're going to have those bounces as the orders come down if we're going to get to those levels. And then right here this is really what we want to look at. And I've been saying this since the beginning. And I've seen you on the channel a few times, so I don't know if you've seen this, but like way back when this whole thing was starting, I said, listen, we break 27,592, we're going lower. And that would potentially support the idea that we could go, bounce off of a moving average. I don't really. Let's see. These are significant. And then we could put these in, because this is on the daily, so it's relative. Oh, you have a bullish cross right here. Wow. On the daily. That might have signified a lot of the pump. But I don't see anything like on 27 to bounce off of. Just looking at the technical analysis, at least on the daily, we could go to the weekly. But to hit 27, or to hit 36, like around, and then that area we were looking at, and then potentially hit 27, and then potentially like bounce or something like that and head down to that. I just, and on the weekly, I mean, if anything, like the 12 hour, and then like, because it comes down to the higher the moving out, or the higher the chart, like, the daily, the weekly, the more significance. And we have like all the moving averages pulled up. We have so many different moving averages pulled up. So I don't see any, maybe there's a fib that we could pull up that would, I don't know, hopefully I answered your question. Disliked. You disliked? What would you dislike? The truth? Dang. Alright. Let's see. Well, at least we know who the dislike is. Let's see. Maybe you have the Fibonacci that I'd have to take off the moving averages. So you'd have this, this, this. Alright, so I mean, there's a lot of different ways of measuring the moving averages. We could go over that. I don't know if there's a moving, or not the moving average. I don't know if there's a fib that you're specifically looking at to target. I just don't know why the price action would stop at 27. Like, there's nothing really on my end that would signify that, unless it's a measured move, potentially, like out of the consolidation point that we're in currently. But I would think that the measured move would. I didn't measure it to the downside, but I don't. It doesn't seem possible that it is. Let's see. Let's see. So you have this potentially right here, and then let's see. So this would potentially be one of the major ideas right here. So, I mean, but then, yeah, you'd need a fib base to get into that. So, yeah, we'll have to do a fib base and see if that works for a measured move, and this is on the weekly. If not, we're gonna have to go to like a substantial pullback, essentially like on the monthly. But I'm like confused about the 27. Let's see. So essentially right here, and then oh, what the heck? That's a channel, right? The heck? Can we do fib based? The heck? That was a channel. I swear I pressed fib based. Oh, I guess not. Fib based time, yeah. So we're looking for the trend based. Alright, here we go. So you pull this to right here, to right here, to right here. Alrighty. So yeah, I mean, down 27, but that's not really relative. So, I mean, not on the trend based. You can't find anything on the macro patterns. Well, I guess we can do the trend based on the more micro patterns, but I don't even know what you would measure. So I'm like, I don't see anything that would say that we would bounce off 27. Let's see. 27. I mean, because this would be where you would measure it. Because like essentially you could measure it right here, but that's not going to pull it all the way down to 27. Alright, well, you can do this fib right here, so potentially what you would do is you'd get this retracement right here, you would go to the monthly, get the top, and then potentially you have this right here, which would be potential wick. You pull this right here. And then, yeah, I mean, if that is the case right here, you potentially have this idea. But then, you know, a Fibonacci retracement is more of a tool than anything, and an art of analyzing the markets. And so off of this idea, you potentially have a target at 26,932, and because it's not, you know, it's not a trend, and so the price action isn't going to affect the price, and then because you it's not a moving average, so the price action isn't going to move the measured move essentially. I mean, you could put right here, but then yeah, I mean, that would work right there potentially. And then, yeah, there's not that idea, but then also this idea would work right here, because this is really where we start to go up. And potentially, so like, yeah, we had that potential target, and then potentially like 26,100, 26,177, but I don't know if you said bounce off 27, but you said 27. What'd you say? Then dump to 27? Yeah, maybe. Alright, let's see. Let's see what Bitcoin's doing. I just want to potentially confirm a consolidation, and then I'll stream later. That's what I'm looking for, but I don't want to be biased and, you know, self-confirm. Let me see. So essentially I'll just, you know, relay the information as we see it. So you got this right here. Boom. 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 And I mean, you could do this and it would still be valid either way. But essentially you have a downtrend on volume. You have that idea slightly negated. But then you have this right here. So high, lower high, and then constantly lower highs besides this potential, but that idea still negated macro. Alright, let's see, 30-minute. There's just a substantial pump right here, and this kind of shows the buying pressure, the buying incentive, more so than anything. So it does look like the market's favoring going up, and you can see that with the, and then you have this doji that does represent indecision, and it looks like it's just a possible cool down from this pump that we're on right now. So potentially you have this right here, which would be Fibonacci retracement, blow off top, or local top, and then essentially, yeah, I mean, we're in the golden pocket for this right now, and then essentially, you know, we could potentially come all the way down here and then move higher, but just holding this level right here as we're in on this 30-minute candlestick, the idea is still bullish for it. It's just a continuation. You might see this green candlestick or this red candlestick and be concerned, but you know, it's not, you know, I'm not even going to measure it because you have this massive uptrend right here, and you haven't broken this idea of at least an extremely bullish continuation idea after a potential cool down. I mean, buying incentive seems to be almost consolidating and then breaking out. Alright. Let's get market cipher in here in a second. I was thinking the markets were going to be consolidating more and I could just leave and be like, alright, that's the tech for today. But I don't want to leave you guys like stranded. Alright. So yeah, that's kind of this, you know, uptrending idea right here. And that's just gorgeous, you know. Higher high, higher high, higher high, higher high. And then, but that is starting to look like, you know, this is, you know, we talk a lot on this channel about fractal ideas and more so, you know, the ideology behind it and really like how they come into like fruition, just not just like, you know, in the charts, but in some of these oscillators. And, you know, you have this, you know, you have this constant uptrend right here, and then, you know, some selling pressure, and then you have this uptrend right here, and then some selling pressure. You have this uptrend right here, selling pressure, uptrend, selling pressure, and potentially uptrend, selling pressure, and then potentially uptrend. And you see this right here, and this is kind of, you know, this fractal idea, or I don't know. We'll have to see if we can draw this. But it's looking good, yeah. I mean, like, the potential for it to go and test that area right now on the charts is looking good. We just need to continue to see buying pressure. Which, with these altcoins really consolidating, we'll see. Or with these altcoins really pumping, we'll see if there's enough buying pressure in the space to continue these. I mean, this is on the 30-minute, so this is relatively important. I know I like to go over more so the macro charts so that you guys can really see what's going on and be informed, but okay, let's see. Wow, that's absolutely gorgeous. I love the touch points on this. So potentially, yeah, this is a very good, valid ascending. And then, yeah, you get this massive wick, and then, oh, well, this is on the 15, but still relative. Let's And then yeah, you have this idea right here of essentially, low, higher low, higher low, higher low, and then this uptrend idea, and then potentially um, a double bottom, and then I just kind of want to show you the idea so you don't get confused. Like sometimes it's like I'll draw it with a white so that you guys can really see. So essentially you have this bottom right here. So this would be the first bottom. And then potentially this would be the second bottom. Or it could be like right here, so like this. And then essentially for the neckline, usually you would have it like right here. And then the breakout for it, so measured move. And this looks like it could be playing out towards the measured move in a consolidation type fashion, like, and that's why we're experiencing this uptrend. Definitely a good idea to be playing out. And it looks like we're nearly to the measured move, and that measured move is going to, so you would measure it, right at the breakout, and like I said, this could right here be the second bottom potentially of the double bottom formation, and then this would essentially be the breakout, which you would measure right here. And it is, a lot of times we see a lot of double bottoms that aren't textbook play out, but this does come down and then find those support levels and then continue higher. Another idea is potentially, we hit this right here, so we come, and then this could also be a ginormous W pattern right here. Can I draw right here? No, I can't draw. But like this bottom and then potentially this bottom. The only thing that is that this, essentially is the neckline is not exactly where I would want it to be, like for like a beautiful textbook pattern. But definitely, keeping an eye on this local top as potential, to continuate into this pattern or to move higher. And essentially, it looks like with this that we're looking at right now, it could, this is really the area to be looking for. This is really the area to be looking for to see, are we going to break through these levels? The second we break through them, we're pretty much, or this area, are we going to go higher, or are we going to get rejected? And let me see. I want to look at the volume, and then potentially, just depending on the buying pressure, I might continue to hold my long open, or I might take a little bit off the top of this Ethereum long that we're killing right now. What is it at? It's probably like straight murking, because the entire time when I was talking, like I was just like straight cashing out, like making bands with the, jeez, yeah, we're killing it. And remember, my Ethereum long was like garbage. Like, like my entry price was okay. All extremely conservative. So, I mean, I guess I can show it, like, it's pretty garbage. And I've taken profits. We've been, like, murking profits. I can show that, too. So, I mean, this is the long that we're in right now. Order, realized PLU, and then, you just scroll through and it's all green. It's all green, baby. We don't take losses on this channel. That's something that you gotta learn. We don't play that crap where, and I mean, look at this. This is like, entry price 10,000 or 11,000 entry price. Like, we've been long in this thing for a long time, and we've just been absolutely murking. I mean, it's just all green. I mean, look at this. I mean, this is literally, I'm on my account right here, just showing you. Look at all the green. Like, this is all, like, green. Like, if I was to, like, not complete this trade correctly, it wouldn't be green. We are just absolutely murking. And, like, I mean, so, let's see. And I'm not doing it to show off or anything. I need to build up validity on the channel. Like, for some reason, somebody disliked the thing. I don't know. Maybe they have a problem with the truth or something. I don't know. But we gotta build up a little bit of validity on the channel. Because we've been absolutely murking, but let's see. That's interesting. This just, to me, the fact that it didn't go down to the bottom of this consolidation pattern, to me, that just shows the buying incentive and really to perpetuate that idea. Um, you know, even with this candle, even with this, you know, formation, you know, not a continuation, even to match the buying pressure. All right. Let's see. Any questions? No. Look at this guy. Dislike. What are you doing, kid? Seriously. We're the hottest freaking channel. Like, we cover all the hottest topics. We might not be the biggest, but that's why we're the most underrated. Let's see. I mean, yeah, and it looks like we could possibly, you know, these aren't Bollinger Bands, so I mean, we can pull up the Bollinger Bands, and I think it will probably be around these areas, and that's probably why but respecting the Bollinger Bands are possibly breaking out of this, and then potentially, because this is almost like a consolidation right here before a potential, you know, especially this right here. So we could break out of this pattern right here, and then essentially we're testing that area that we were talking about, these resistance lines that we were looking at, and then the local top to potentially put in a higher high, which would be significant. Alright, let's see. Alright, I'll pull up the Bollinger Bands in a second. And potentially, we can move it if it's not there. Alright. Yeah, I mean, I'm probably gonna be. I mean, unless the, you know, you don't want to just, and I don't want to say like you don't, but like, I guess I can only say that like I wouldn't. You know, it looks like the measured moves are coming up to right here. We're basically gonna come up right here, and then potentially we have that possibility to head down after fulfilling those orders. We have to see the sentiment, but essentially, so like taking profits like right here, especially if you're in a massive long position, like, or at least scalping and deleveraging part of your position, would not be a bad move. But the reason I'm saying that we're not going to do that on this channel is because we need to see the sentiment. I mean, the sentiment is very bullish right now, and if that sentiment continues, we'll hit this measured move, we'll break this macro trend line down, and then essentially we'll look at the market sentiment to see if we have the potential to break this area. Because if we can break this area, like if we can break this area right here, that would be massive. Let's see, how's the. Alright, I'm gonna get the Bollinger Bands. Let's see. Oh yeah. B. Bollinger. Because this is, I think, yeah, that's what I thought. It's not necessarily that the idea is bearish, it's just so that, let's see. Yeah, you just have this corrective on, and this is on the 15th, so this is probably the top of one of the bands on one of the charts. It looks like it's just, you know, and, is this the midway point? Oh, they have a weird color scheme on it. This is a moving average, this is an SMA that it could potentially find support on. And then, yeah. But look at, you see this, you see this downwards price action, but then you see this is a lower. So trending down at least on the volume, but more so on the buying selling pressure. Ask me questions if you have any questions. No questions. Let me know. That's so funny. Somebody put a dislike. Shoot. All right. Oh, let's pull up my market cipher and go down. Alright, so I mean, yeah, again, I'm not concerned at all. We could potentially bounce off of a lot of moving averages. Boom. Kapow. Ichimochi, come in. EMA 21. I mean, look at, like, that's pretty decent. And then obviously we have these trend lines. Gorgeous. Is there anything else? Oh yeah, we want to pull up the ciphers. Gorgeous. That's A. Alright, and then what we do is we double click. Beautiful. Market cipher on the 15 saying that this is a top. Remember, this is the 15. This is interesting. I want to take a look at this for a second. The RSI oscillator on market cipher is just, it's interesting. So we're going to draw some trend lines on it, see if we can't. Oh wow, yes. Very much so. Alright, so give me 1 second. We got some important stuff to discuss. Right here. Right here. Hit this one right here. And put this one right here. So like this would considerably be, would it be weak? Let's see. Yeah, that would be weak. This is weak RSI divergence. This isn't the RSI, but this is, a modified version of the RSI. We can pull up the RSI, but essentially you have a divergence. Obviously you can see that the price action is setting higher highs on this time frame, and specifically, if you want to do it like to an exact science, which on this channel we do. So essentially you have this low right here, or you have this high right here, and then essentially as you move over to this point right here, you have a much higher high, whereas on this you have a high and a lower high. So that is diverge. It's diverging oscillator. So the oscillator in this case is the RSI, and then the price action is obviously right here, and they are diverging. So we have some RSI divergence on the 15, but I'm sure it's playing out on other time frames. But let's use the actual. We don't need market cipher. We know what we're doing. I love to scalp with market cipher, and like there's just a lot of different relative strength index. Let's see. Yeah. Let's see. Oh, is it? I mean, no, right? And then zoom out. I guess not. They say this is the RSI, but it is modified. So I still do think that this is relevant because this is an oscillator, and the oscillator is diverging against the price action. And you can, measure divergence on things like MACD and such. So it's diverging against the oscillator, which is textbook divergence, MACD. Where you got it? Pull up. Pull up. Where she at? She at? Come on, man. Where you at? There we go. I like how I didn't put two of them in. Alright. Okay. That's fine. Alright. Money flows, and that's kind of this idea right here. Money flow's not looking decent. It's on the 15. Take it with a grain of salt. It's just interesting. Market Cypher's calling a top right here, but we have to remember that it's not factoring in this trend line. So it's a 10. I'm not going to use the 10 just because. I'm not going to use the 7 because nobody uses those. I put those in because I was trading a few days ago, and I was just like, I wonder, Wow. Interesting. Very interesting. It's painting out really nice. You have almost like a morning star pattern following a bullish engulfing. Wow. And then you have a downtrend on the 5. And it's breaking through all of these. It's on the 5, so it's like, but essentially what we're going to do is get this Fibonacci pulled out. Because if we can get the Fib pulled out right here, so it should be like right here, and then I'm going to adjust it. I just want to make sure. Okay, that's good. And then essentially you would go to the pump, which would essentially be, it looks like right here. And basically I want to see, what's the deal with this downtrend? Is it, going to have a bounce? Is it going to continue? And let's see. Alright. These oscillator waves are showing some bearish. Let's see. So you have this right here. This right there. There we go. So potentially the pump would be right here. Nice. Right, let me just double check. I mean, let's go macro to really get an idea. And yeah, when you go that macro, it's like, it's almost like a joke that we're pulling back where we're pulling back right now, and I'll show you what I mean. So essentially you would pull this down to right here, and the pump really started about right here, and then you essentially have this idea right here. And then yeah, this is a perfect, more macro look at what's going on with this downtrend potentially right here. Is potentially we can still hit this area right here. We can break this potentially. It's like if you're closing positions and stuff, and it just really, Ethereum looks to be such in a good position. Like, just like the fundamentals of the market, the fact that so much money is going into altcoins right now, like there's just not enough money to move Bitcoin drastically one way or the other without some macro patterns really breaking. And so I'm glad on the channel we chose to do that. But essentially, like if I was in a Bitcoin long, potentially I might, especially if I was in profits, but sometimes you gotta take hits. We don't really take hits on this channel, but potentially, if you weren't like, if you were in like something high leveraged, potentially you could lower your position by, if this breaks, exiting a small position, and then potentially right here would potentially be, if it broke this support area right here, this golden pocket, the 618, then, but really what we want to see, it would have to come all the way down here for nearly like it would have to break this support line for this uptrend to really be confirmed broken. I mean, something that you could easily see is something like this right here come down, and then essentially you have like a bounce off this line right here, come up, and then maybe like a double bottom type idea. Just so many different ways the charts can play out, but essentially like going off of all the fundamentals and basics, this thing's a joke. Wow, the entire time I was explaining it, we got the reversal. Like, I was trying to explain this. Jeez. Freaking price action, slow down. I was trying to explain that this was gonna happen. Whatever. Do you have any questions? Like, solid, thank you. I really appreciate it. I don't know what the other guy, like, he's not for the people or something. I don't understand why he was upset. We're just trying to, be a part of the crypto community and get this crypto bread. Who was that guy? I don't really watch Crypto Kirby, but he's always like, let's get this crypto. I thought that was cute. Dang, we are getting a strong pump. So we're testing this area. My concern right now is we're hitting yeah, like exactly. Like we're having this strong pump, and essentially if we pump up too hard, too fast, we're gonna hit this area and potentially bounce back into the pattern for something like this. But it looks like we're getting that correction that I was just about to talk about. Where basically, like, if the price action moves up too fast, like, people are going to take profits and stuff. Alright, and then, this is interesting, though. You have the Bollinger Bands right here, and then it's probably relative, so if we do start to break out of this pattern right here, we could potentially hit it, break out, consolidate on the outer level right here before breaking out higher, just to respect the Bollinger Bands. Something kind of like this. And then I think we were just way, like I said before, this is almost like a fractal idea. If we were to just come up right here, hit it like this exactly, but there's too much buying pressure, and then essentially, like there's too much buying pressure as in the sentiment that it goes up way too quickly and it's not sustainable, and then it comes back down. We could see like a fractal like that. It just depends on how we approach this area, but potential breakout. And then obviously you have all this bearish idea, but what, you have right here, you have this high and then lower high, but then right here, you have this, like this is what they're not factoring in, the automated system, which we can show very clearly. Here, let me draw it for you guys. Is essentially, if you measure it like this, if you measure, obviously going down is bearish, but then if you say that this is the anchor wave, and then you say this right here is the trigger wave, you have an entire trend going up. You know what I'm saying? So, you have this anchor wave right here, and then essentially a trigger wave, and then if this, essentially this is the trigger, or if this is the anchor wave right here, a continuation of this trigger wave right here, perpetuating that bullish idea. Beautiful. And it looks, yeah, like almost fractal, but you're going to start to see that as this uptrend, continues, because then essentially if you have this as the anchor wave right here, you're trending this trigger wave higher, and then this trigger wave's higher, and then if we can see a higher trigger wave from there, I mean, on the short term, the oscillator, the wave indicator looks just absolutely gorgeous. And you're printing these like sell signals potentially, but really what we're looking for is a potential um, top, which it doesn't look to be the case. And then this is really nice, the fact that you have, this, price action continually trending upwards. You have this fall off, and then potentially, as long as we continue to go up, we negate this higher high, that's just gorgeous. But even if we don't, this is more so in consolidation of this, like we have this entire room to fall into, so we don't even need money momentum right now. This is looking a little bit overextended, and what we want to see is a higher, so we want to see this price action right here come higher than this price action right here for a continuation of this idea. And I think the market, best case scenario I see right now is potentially we consolidate, we come down to like right here, find support at this level right here, and then continue higher, break this idea right here. But we'll see what happens. Let me see my connection, see if we're good. Oh, that might happen. Let me see if my connection's good. I got an Ethernet cable. I told you guys. I apologize that we weren't. Let's see. How's the connection? Please check connection, but it's still looking good. All right. So essentially, like you got this idea of. Yeah, I mean, it's pretty much, it's just one of those things where you just kind of have to watch the charts. Like, I could talk all day, but, like, at the end of the day, we need to see what's going to happen. And then, you have those bearish ideas, essentially playing out on the charts right here, which it's talking about, and then we negated that idea. And then I talked about a potential bottom, and it looks like right here, it's calling a bottom right here. Let's see on the 1 minute. Yeah, and then there's no top on the 1 minute. So, and I mean the top, like on the 1 minute, it's going to call a top immediately. So, and money momentum is moving up, and that's kind of like what we want to see. Oh wow, even a long right here, it's saying but this is on the 1 minute, so I mean, take it with a grain of salt. And then this is kind of trend reversal. This is a short idea that didn't play out. Well, I mean, it did, but you know what I mean, like, didn't continuation. Alright, yeah, I mean, it's looking really good. And then, like I was saying before, with the whole Bollinger Bands idea, this is on the 1 minute, but essentially what we're doing right here is riding the Bollinger Bands up. So we're not just going to explode up is what this idea on the market seems to be. If we explode up, we're going to come down, retest it, and then continue into these Bollinger Bands and basically move with the Bollinger Bands, not breaking above them, riding the Bollinger Bands on the way up. And then again, we want to, is this what we were looking at? I'm pretty sure something like this, or was it? Or maybe this was the idea and we already broke it. But this would be the next potential. We want to see this break. Let's see. We have an ever so slight rejection off of it, but that's probably not going to be really factored into the market. Let's see. Yeah, that's really what we're looking at right now, is can we set a higher high right there, and then that would potentially have a massive continuation of this upside, because we would be setting a new higher high to continuate, this idea that we're in this uptrend channel. So we'll see how that plays out, but it's not necessarily anything other than, and I mean, most people aren't going to be this zoomed in on the 1 minute. So for most people, it looks like we're nearly at level with it, and we're nearly about to break through. If not, we didn't. If not, we did break through. If that makes sense. Like most people are gonna be trading on the 4 hour. They're gonna look at this and be like, okay, like we basically, you know, and usually when it comes this close, like it just breaks and goes higher. So potentially what we're looking for is, that's interesting that we found support right there. But potentially what we'd be looking for is like if we were to come down and then find support off of this ascending channel and then move higher, trading channel up. But it looks like it's about to break it and then play this idea, and then if that is the case, we'll see. That looks like it's going to be the case. This is like a doji more than anything that it printed. Bearish engulfing, but then that idea is nearly entirely negated, and we're cooling off, so it just all is pointing good. Market Cipher just printed a top, but you know, take it with a grain of salt. Like, don't take it as facts because it's on the 1 minute chart. Yeah, so I mean, we have a lot of major trend lines to break above, but right here it doesn't look like very much resistance at all. You know, from like you know, the measured move right here is approximately 34,479, and then our first major, as far as trend lines go, is all the way up at 35,437. We will see. Ask me any questions if you have any questions. We have an Ethereum long open right now that's absolutely doing good. I haven't even considered taking profits on it. I think it just looks really good. Even if Bitcoin does come down, it looks like it's at the very least going to relatively consolidate, and the buying pressure looks pretty decent on it right now. And so the only real downside I see for Ethereum, like, and February is supposed to be a big month for Ethereum. The only real downside I see for like this is more of I'm in like a swing trade, like I told you guys before on the channel. It's a lower leveraged, and I'm really just trying to get that parabolic run up, and I think we got some of the best. You know, I cost-based averaged into this position back when we were hitting, like I was telling you guys, like when we were back at like 12,000 whatever. Like I got like, I think I don't know if I hit the exact bottom, but I remember buying and adding to my long position at 12,600. And I think lower than that. I'm not sure. I don't know if it will show me. Orders. Yeah, I mean, these are pretty low right here. So, I mean, I don't want to have my order number, but, oh crap. Let me see if I can just cover it like this. I don't even know how relative the order number is, but I want to show you guys, because you guys, freaking, I don't know how I would show you guys this without showing the order number. I mean, the order number is not relatively important, but I don't know. I'll like, I don't know. If you guys really want to see it, I'll like put a piece of paper on it or something. But it'll take me a second, so. But yeah, I got in freaking low on the Ethereum. We like hit the bottom, like nearly, and then obviously we have the potential to, like, you know, hit the top of that consolidation pattern that didn't end up playing out, and then we can basically, like, if we need to, if we get rejected off the top, we can essentially take out at least half of our position, because maybe it's just a fake rejection. And then basically, but we can scalp the entire position that we have right now in Ethereum, and basically, like, it seems like to be the sentiment that we're gonna head up and test that around 36,000 on Bitcoin, which is going to be a continuation of Ethereum's price action continuing to go up. And if that is the case, then we can take profits there, or at least scalp the position. And then if the market does end up dropping, we can strategically look at it and evaluate the sentiment to see if we want to. And this is kind of the cool thing about trading. Like, people say, well, like, why do you just trade? And like, why, well, not just trade, but why don't you just like hold Bitcoin and leave it? And it's because these massive consolidation periods, when Bitcoin's price goes down, we essentially, we can hit once we call the bottom, we can hit that long, ride it up, it goes up, but then it goes back down. We hit another long, and then it goes up, and we can basically, it's like when I say that I was heavily, longing Bitcoin around, see, this idea is negated. So this top right here, I was like, take it with a grain of salt. So this is essentially showing a bottom. This is essentially a bearish idea, but we have this continuation up. Really what I want to see is volume. But when I was like heavily trading, I wasn't just like heavily trading from 11, and I mean, this totally negates that idea. So volume's definitely coming in. This totally negates this idea, because we can just get a bit bigger wave that's going to negate this, and then we're going to be in a massive uptrend on the waves. So when I was like massively trading from like 11,000 to like 42,000, like, people think that I just made 11 to 42, but it didn't go up in a straight line. Like, it would go up to like 15,000, and drop a little bit, and then we would open up more positions and then keep longing it. But I mean, longing Bitcoin used to be the absolute move until that monthly candlestick closes. And I don't even know if Ethereum is just so underrated right now. Like, and Bitcoin and Ethereum are so correlated. Like, all the positive price momentum that we've been experiencing today with Bitcoin, we're going to see, like, I've already seen with Ethereum, like, relatively speaking. And like, so it's just like, and the fact that, there's potential downside with Bitcoin, like, there's like that, if those buy walls don't hold, whereas like, and like, potentially the bull run could be over, where with Ethereum, like, there's like no chance whatsoever. Like, even if there isn't even a uptrend, which there is, nearly impossible to break, it's the fact that, Bitcoin, going down will, and alt still pumping, and that perpetuation of that, that's going to cause Ethereum to pump, because Ethereum is technically an altcoin, because a lot of people don't like to say that, but it is like an altcoin. It's not Bitcoin. So I mean, Ethereum's up 9.6, 9.7% today. So I mean, it's keeping up with Bitcoin, and it's just it's on like. And the fact that it didn't like outperform Bitcoin today, it just like further perpetuates to me like how undervalued, like, massively Ethereum is. Just so like, and like, this is how you lose in trading. And I like that Martini guy. He's a crypto trader that has like 60 or something thousand subscribers. He likes to say this, and I agree with him. And it's like, if you really want to lose money in trading, like, what you do is you constantly flip flop. So you go with your, what to be true, which is like, for me in this example, Ethereum is the move. And then if you flip flop, and like right now Bitcoin's returning 14%, if you're like, oh crap, like Bitcoin's returning like 5% more ROI, and on a long position, that's relative amount higher. And so then you flip flop to like a Bitcoin long, because you're like, nah, Bitcoin's where it's at. And then the second that you do that, Ethereum starts pumping, or that idea where it's almost like a meme where you're like, you're getting wrecked in like a long position. You're like, crap, I just can't win. Like, it just keeps going down. And so you close out your long position, you enter into a short position, and then the second you do that, the market turns against you, and we've never experienced anything like this on this channel, but it's obvious, that, let's see, the pump is strong. I mean, relatively speaking, you look at it like this. I mean, look at this volume momentum that's not nearly eclipsed by, and even just relatively speaking, let me zoom in a little bit more so you can see what I'm talking about. But yeah, I'm not concerned. You guys were looking at that and you're like, oh my gosh, we're going down. So like you have this right here, and then essentially you have this volume like nearly eclipsing it. Like, look at the buying pressure, and then the selling pressure just isn't there. I mean, that idea could change, but right now it's just not there. But so yeah, that's that flip flop idea, and we're not flip flopping. Ethereum is definitely the move, and it's not just because I think that. It's all the institutional, it's all of the, every YouTube channel, and a lot of these YouTube channels really pump the price. And then on top of that, it's also like the ecosystem about burning the tokens. And really, are the Ethereum miners gonna beat out, the staking nodes? There's no chance. Like like the FUD in Ethereum is jokeable. Like, it's so laughable, the FUD that's in Ethereum. Like, oh my gosh, the miners are gonna win and revert the network back to mining only. A lot of these miners, they get it. They understand crypto. They understand it's evolving, and that Ethereum is moving over to an entirely soon, relative, relatively soon, Ethereum, like a proof of stake network entirely, and that these miners, they're not going to be, and they can mine freaking Ethereum Classic, and then their setup should be able to mine like Bitcoin. Like, I wouldn't mine Ethereum Classic. Like, people always come up to me and they're like, and I was like a Bitcoin Cash guy for like a small second. Like, it's just like, like with Bitcoin Cash, it's like, it's kind of like, for a payment method, the branch off of Bitcoin Cash is the fact that it moves faster, it has faster transaction speeds than Bitcoin. But Bitcoin's not really trying to be that method of payment. It's supposed to be a store of value. And so, I mean, I was like kind of into Bitcoin Cash for a little bit, like not like massively, but like an ever so slightly amount. That's like, and when I say that, that's like the only like spin off of branch off. Forget what exactly they're called. It's where you take, you run your own. So a potential reversal idea, we're looking for potentially it to hit this right here is potentially where we're looking for it to hit in the immediate short term to think about a reversal idea. We will see. But volume is also trending down. Selling pressure is trending down, but we'll see. Because, I mean, it is on the 1 minute, so shorters could be taking profits. We'll see. But, what do you call that? It's not like called like a branch or something. It's called something else. But, yeah, Bitcoin Cash. But yeah, the Ethereum miners, like, and the thing about Ethereum, like, it's so, like, that 32 staking node, it's so ridiculously, like, decentralized, like, more so than Bitcoin, as far as, like, the amount of people, like, there's so many people that run ETH32 Ethereum staking nodes, like, and whereas, a lot of the Bitcoin miners, it's, like these massive companies that run them. So it's not as decentralized. The Bitcoin network is worth more, but a potential hack or something like that, I don't want to spread freaking FUD, but there was always that potential of the China hack. It always seems that China, though, is perpetuating this idea that they want the currency. And, when you think about Satoshi Nakamoto and the fact that, like to really understand, I was talking about a little bit earlier some like economic principles, like to really come up with the original white paper for blockchain technology. Like that's a new technology. You have to really understand economics. You really have to understand a lot you have to understand like the history of currency manipulation with things like, obviously everybody knows about the goldsmiths and like Rome and Greece, how they, with the cheap metals essentially that they put into their gold and silver so that they could free up more gold so they could make more gold to like artificially increase the supply of their currency. So like we all know about that, but not everybody. I mean, everybody in cryptocurrency is pretty smart and understands a lot of like the history of monetary manipulation, which is huge, and then obviously the economics that really govern and make a finite asset like cryptocurrency valuable, and then also the technology, blockchain before Bitcoin. That white paper introduced this new technology, and so just a lot of factors, and then also just like market psychology behind essentially like like is it gonna take off, and then so like the all of those factors like in and of themselves, like you have to be extremely smart. And so the fact that this Robert, or what was his name, Satoshi Nakamoto, like this guy is just like some random guy. This is most likely like China or, and like what makes me say something like that? Well, Russia, the entire country of Russia is backing up Ethereum. If you don't know that with Vitalik Buterin, I mean, it's just facts. Like, watch some Ethereum documentaries. So the potential for like the technocrat elites or potentially China to be perpetuating cryptocurrency and pushing it forward as one of their agendas is highly likely, because when you think about Satoshi Nakamoto's bag, I mean, he's a billionaire and he's never cashed out on one Bitcoin. And so you have to think to yourself, well, if he's, a part of the technocrats and the technocrats created this, the technocrats' evaluation is nearly close to 1 trillion, with all of them involved, like Bill Gates, these kind of entities, and then, their cabal, like their main group is, some of the wealthiest people, like I said, the elites that really run the planet. And so when they do have, Satoshi Nakamoto would have a potential value at this point of $100 billion. I mean, it just doesn't seem feasibly possible, reasonable whatsoever that, somebody creates something that's this sophisticated, this advanced, has the tokens, and then decides, like, obviously it took a lot of planning and a lot of intelligence, and for them to not cash out on $100 billion bag, not to sell one single token from the inception of the project to current day, to where it's now worth over 100 billion. Like, what are they waiting for? You know what I'm saying? Like, if they cash out, they would be one of the wealthiest people on the entire planet. um, and so it kind of begs the question that, well, maybe they already are one of the wealthiest people on the entire planet, and another $100 billion doesn't mean a lot to them. Either that being that they're Chinese, and that, China, they've had some issues with currency manipulation where essentially, if you don't know about the Bretton Woods Agreement that was signed after World War II, essentially China is not getting a very good deal. The United States dollar is the reserve currency of the entire world, and everything's backed by the United States dollar, which is backed by the Marines, essentially. It's not backed by, when you read a dollar, let me see, I think I have some money in here. But essentially, I mean, like, all the answers are on this dollar. Like, for example, what is this? It's not even a dollar. I just call it a dollar so that you can identify it as a dollar. It says right here it's a Federal Reserve note. And then it's hard to see, but you can see, like, right here, whether you look at a dollar yourself or I don't know the visibility, but it says this note is legal tender, and that's the intrinsic value that this has. The United States is willing to back up this currency, and that's kind of the intrinsic value that it has for all debts, public and private. So essentially, this is a credit for $1 worth of debt. That's what this is legal tender for all debts. Notice that it doesn't say, it says for all debts, public and private, and that's kind of the basis for this credit-based system. Is essentially this is a credit unit of to pay off one debt. That's what it is exactly says, and like the equivalent of $1. So it's a debt-based, credit-based system. And like when you go to the bank and they ask you what's your credit score. Basically, that's your credibility to attain more credit. What's credit? This is credit. So, I mean, you have to kind of have a very advanced understanding of finances and a very advanced understanding of finances and economics to even, and it looks like we just flipped bullish out of this, and it's looking very good. But you have to have a very advanced understanding of finances and not really advanced in the sense that just not mainstream. Like if you're reading like Dave Ramsey or something, like you just don't know economics, like save money, congratulations, like that's not going to do anything for you. Dave Ramsey doesn't talk about, leveraging credit. When you leverage credit, when you have credibility, you get access to more credit, which gives you more credibility. You know what I'm saying? And that's how you have to look at it. That's how it is supposed to be looked at. And so essentially, you have this idea that potentially because of the Bretton Woods system, where the United States dollar is not backed by anything, every time the the yen, the Chinese currency is forced to be a part of. Every time the yen is forced to be a part of, this current monetary system, then it essentially loses value because it's being backed by nothing and it's being watered down. And so maybe, possibly, nobody knows because it's Satoshi Nakamoto was anonymous, which just, kind of adds to it, I suppose. But he, is creating something that's intrinsically backed by itself. So if you were to pour a massive amount of United States dollars into, say, Bitcoin, it naturally holds its value with inflation, which is something that China would be massively interested in if it didn't want to raise global tensions by not being forced to participate in the Bretton Woods Agreement. And then obviously the World Economics Forum is talking about Bretton Woods 2.0. Oh wow, we're almost to the measured move. Nice. But, at that point we're just speculating. But there are the technocrats, and because the technocrats, what's their incentive for creating something like this? It would be the fact that the technocrats, they have a massive amount of assets and a massive amount of, this is fine, like this little, we set the higher high, we're already looking good. Let's see. Yeah, we're looking good. Let me get the fib. The incentive for the technocrats to be creating something like Bitcoin would be the fact that they have a massive amount of financial power, and essentially their incentive would be that they want to keep that buying power as inflation occurs, like as they know inflation's going to occur through all this money printing. They essentially don't want to be evened out by, the common people. Like essentially they print so much money that their initial capital is not worth as much, especially when they would be forced to speculate on new endeavors. Like they would lose potentially some control over the new system. But if they potentially created Bitcoin and then they knew about the inflation, then essentially as everybody's pouring their money into inflation, value always continues to rise because it's like a Ponzi scheme where they're at the top because they created it and they have the initial bag. And then on top of that, they could initially pull the bag um, that they originally created. And if that was the case, then that would be kind of like the Great Depression, 1929 type scenario, Black Thursday, where essentially, like people don't really understand this, but um, the elites crashed the stock market in 1929. Black Thursday, it's not like a conspiracy theory. If you look at like when you look at history, when you study history, these kind of things, you need like historical context, and relevancy and things like this. And like what you have to understand about the stock market back in 1929, a lot of people were just starting to like elevate themselves into the higher working class. This was right after an area called the Roaring Twenties, where essentially America had entered into a time of prosperity. This was right after the time where essentially you had like this working class that was working massive, massive hours trying to, the Rockefellers at the time. It's not like a conspiracy theory that this is like if you read your history book. They controlled a lot of the oil monopoly and like all of these major elites at the time, which were called robber barons. Um, let's see, we're still looking for potentially this accumulation, and then potentially this would be the potential for idea of a reversal, but it's, we set this higher high, so it's looking good. Although this could potentially be the measured move that's playing out into a consolidation, and then we could potentially find support at this level and consolidate. But you have these robber barons, and essentially what they did is they paid politicians back then. I mean, this is facts. Like this is like you just study your history. Um, the guy that wrote Huckleberry Finn, Mark Twain, talked about this multiple times, said that politicians were very corrupt back then, and that he essentially was saying that it was like, and it was called, and you will read about it in your history books if you study history, it's called the Gilded Age, where basically it looks like a great time in American history where America's thriving, but just like a gilded coin, on the outside it's gold and on the inside it's all like tarnished cheap metals. And essentially what you had was everybody was pouring their money into the stock market because America was doing very well for itself. And then the second that, Black Thursday hit, the elites, and the reason I say the elites and the reason everybody knows it was the elites that pulled their money is nobody else had access to the amount of capital that would have caused the stock market to drop that percentage on that specific day. On Black Thursday, the stock market tanked, like tanked. And it's not like you can't think about it like the Wolf of Wall Street or something. You have to understand history and historical context, and the fact that there was only the New York Stock Exchange at the time. Only a small amount of people were allowed in. And then on top of that, you had these brokerage. You couldn't call your broker account and be like, "Oh, sell." There wasn't like a computer you could pull up and you're like, "Oh, sell at this price." It was all the same. It was all um, you had at the time these brokers, and you either had to tell your brokers before or whatever. It was a room, and only a certain amount of people were in the room, and there weren't enough people in the room with enough buying pressure to sell, to move the markets down enough to get like all those different prices liquidated, if that makes sense. And a lot of the reason the market crashed, which we kind of talked about earlier when I say that things like the equity markets, especially as interest rates potentially go lower, is the when you're on leverage, and this is like back to the housing market and the stock market or the equity markets, is potentially you have that potential to have a crash when you're on leverage, because as soon as you get liquidated, as soon as your margin runs out, or these different factors depending, whether it's time based or whether it's on margin, whether it's a contract or an option or whatever it is, a put, or you know so you essentially have these market fluctuations, and basically it crashed the entire market. And the only group of people that had the majority of the wealth to do that are the robber barons, like people like John Rockefeller, J.P. Morgan, orchestrating a crash, and that brought in the stock market crash. And so, essentially, when you look at history, you want to look at history, to predict the future, or to help with the predicting the future. And essentially, what you would be looking at is, could the same idea, we're looking at this line right here for potential, but what you're looking at is, could the Robert, or what is his name, Satoshi Nakamoto, the guy that hasn't sold any of his Bitcoin, could he potentially do this rug pull type scenario where he insinuates the crash by pulling his money out, and then essentially that would crash the markets, basically out of fear, and have a trickle down effect? That's potential. The other potential, and it's kind of my sentiment towards XRP, is the fact that, even though he does own a relatively decent portion compared to the rest of the world, Bitcoin is so decentralized in terms of like the monetary, that you would have to have like Satoshi Nakamoto not only having his public address, like that he, like we know that he mined the coins and that they're, in his wallet, but also he would have to have bought a significant amount, in the beginning, and held on to them to potentially drop that price significantly enough if it wasn't induced by fear. So what I'm saying is that potentially, whoever Satoshi Nakamoto is, his bag has never been sold. He still holds all his coins, and it's worth over $100 billion approximately in United States dollar value. And for him to drop the coins, because the crypto markets are so big, or is it 100 billion? I don't know. You can look it up, but it's something significant. It's like a little bit less than 1% of the Bitcoin network. But as people continue to buy those coins, but at the same time, it's that finite supply. And so the only thing that's going to drive down his percentage of the Bitcoin supply is not necessarily as people put more and more money into it, because he still holds that exact amount of coins, and there's an exact amount of coins on the market. What's going to decrease his percentage owned is the Bitcoin miners' ability, and it's at a fixed cap according to the halving. So, and according to the halving, as in the halving. And so, like, as the supply increases, with the miners and fees, that will bring his position down, which it would cause potentially some stir in the market if his coins were to all just be dumped onto the market at one time. Let's see if we have any questions. No questions. This is saying it's a top, but I really do like this. Not only did we set a higher high right here on this, but then also on the waves, like what we were talking about. And it's that great idea. Shoot. It looks like we didn't hit these higher highs. That's fine. We just want to see that in the coming waves that we can try and get. And this is on the minute chart, so, but if we could see a massive wave to eclipse these waves, that would be extremely good. And then it looks like at this point we're nearly in consolidation, with the fact that selling pressure is approximately as high as buying pressure. I'm gonna go put my dog out, but put her up. But you guys can just watch this. This is what we want to see. Is we want to see this bounce right here potentially. Alright, so you have this potential bounce idea. It's not played out yet, but we will see. Potential for this, and if we bounce off this trend line, that would actually be more bullish than anything, because essentially we're testing this area, and if we are to find it as support, then essentially if we hit this right here and move higher, then we would have 3 touch points for an uptrend, which would be not looking good. That's crazy. It literally pumped up, and then I think it is gonna short. This is basically a short sell on the. We'll see what happens. The bulls really need to show up here. Oh, that's good. The idea got negated. Yeah, this is huge. This looks like, again, this is on the 1 minute, so take it with a grain of salt. But right now, this is looking exactly perfect for that bullish scenario of continuation to the upside. And it looks like we did nearly hit this target, but potentially continuing to move up in this uptrend, essentially, even though we broke out of this rising channel. Alright, let's see. Oh, it's got the idea again. Oh, but we did close on the 1. Let's see. Yeah, we really just, and then you have right here, you have the I mean, there is a slight decrease, but then this is an increase. We just want to see a perfect scenario would be if we saw some buying pressure up to here on the volume, or at least if it could break this right here, that would be optimal. And then relative to, let's see. So we did break this, but it looks like, wow, that's crazy. Yeah, I mean, so when these things come up, you take it with a grain of salt. I don't know if I would long this. This looks overextended. It looks like it could pull back, and then, well, we'll see. And then hopefully, this is really what we're looking at right here. Oh, it broke right through it. So even though it just wicked, it still technically broke through it as resistance. Yeah, it looks like if anything, we're just going to consolidate. I mean, this is just so much buying momentum. It's not really sustainable. And you have this idea of consolidation, and then essentially consolidating and then potentially moving higher, breaking this area, and like I said, validating that 3 touch point area, as long as we just get a candle body, which should be pretty easy above this level. It's looking good. And like I said, just don't be concerned if it goes down a little bit, because this was unbelievably massive move. Yeah, and I was a little bit concerned about this right here, where you had this downtrend, but the fact that we had this continuation right here just totally negates that idea. Let me see if you have any questions. Just let me know. Ooh, what are you doing? Jeez, it's bullish. I mean, this is technically bearish, but yeah, I mean, consolidating possibly between these lines right here would be interesting. But technically, and then I guess what we would do is we would move to the 5-minute chart. And then essentially we would want to, yeah, we got this close on the 5-minute. So then what we would do is we'd go to the 15-minute. So this is looking really good. So yeah, then what we would do is we'd go to this 15-minute right here. And where's that? Oh, we got the close on the 15. Are you serious? That's probably why it spiked up in action so much. Is this a close on the 15? This is so difficult to read. Yeah, it is. Jeez. Okay, that's good. So now what we do is we go to the 30-minute. So that's why it spiked up so much. There's so much bullish confirmation on this test. And essentially we found it as support. And then, yeah, I mean, we're on the 30-minute right now, which is huge. And we got this nice wick right here, testing it, coming up, breaking out of it, finding it as support. This area right here doesn't really have relevance whatsoever because we already broke above it. So it's no longer resistance. So potentially, like, you know, what we're looking for next for possibly like a pump up or, you know, just like some more bullish confirmation is the fact that, well, we want to see a increase in volume, but consolidation right now is not um, something to be concerned about with our giant move up that we just had. So essentially, and I mean, relative to this golden pocket that we're in, you know, we're relatively high and bouncing out of it, you know, on the more macro time frame. So it looks, and the fact that we were able to hit this area, come up for support after breaking this major, because this was more macro. And so essentially what we're just looking for right now is, I mean, it just looks good right now. I mean, we want to hit a higher high, or, you know, potentially on those smaller time frames, we want to see that, you know, continuation to the upside and validating. Like, it's not just necessarily a higher high, it's the fact that if we hit this next higher high, then we have a valid 3 touch point on an uptrend, which is substantial. But, so, I mean, we can literally come back down here, and as long as we hold this level, it's still good. And again, like, take it with a grain of salt though. Like, even though we're going second by second and it's looking good, just understand we're only on the 30-minute on a confirmation with lack of volumes. This isn't like, it's not like a 4-hour candlestick close where like, oh my gosh, we definitely found this as support. It's immediate support that could flip resistance. Yeah, I mean, Ethereum's just killing it. So, I mean, yeah, we're making decent money on our Ethereum trade right now. I feel like I want to show you guys just because, like, I don't know, like, being transparent I think is, like, important and, like, things like this, so. Let's see. And you have this long right here idea, or potential bottom idea right here. But then it was negated right here, so I kind of want to go to the higher time frames and see if what they're saying about a bottom possibly forming. No. It'd be right here, and then right here. Okay, yeah, so that looks pretty decent, but essentially what we're looking for right here, I mean, on the lower time frames, we want to see more volume, and we want to see it trend up, and we want to see it trend towards, you know, these green candlesticks, but to confirm more so this idea, but it's not necessarily that we're nearly looking at any breakout type scenario, so we could just consolidate up like this into the trend. But on the higher time frames, I mean, this is only the 40-minute, but this continuation idea that this yellow right, or this white right here continues to trend down, which it is, but we just want to see this, you know, exit a little more sharply like this and really be narrow, and then potentially have the dark blue coming in so that we can basically confirm, at least on the smaller time frames like the 45, that we potentially have a bottom, which would be huge. So we're going to go back to the lower time frames, check out the volume, see what's going on, and then just monitor, you know, the trend lines that we're looking at right now, but it's looking good. Yeah, it looks like, is it? Yeah, it looks like we broke out of that golden pocket ratio area. Well, not currently, but we did, and so that and yeah, currently, and so that does so we can get rid of this because that negates that idea, which is good. And we got bullish engulfing on the 5 minutes, so decent. And you kind of had this idea, and it's like, oh, is this the top right here? Because you have this falling star, essentially bullish engulfing, not entirely engulfing the previous, but that ideology, and then a continuation was strong, and then the fact that we were able to negate that idea is massive. We just want to see a trend reversal, essentially. Volume seems to be on these higher wicks. It seems to be trending downwards, lower than buying pressure, but this could just be like I said, consolidation. Let's see. Oh, nice, we got a little it's on the 5 hours, or it's on the 5 minutes, so. Alright. Let me see what my trading group's saying right now. And then somebody asked me on a different video, I ended up like just, I think, direct messaging them or something and answering their question, but they asked me if I'm personally run a Telegram. I don't personally run a Telegram. I definitely kind of want to, just because like sometimes I'm like in bed or something and I'm looking at the price action and it's just relatively important, but it's not massively important to where I should like make a video about it. So being able to stay in touch with you guys, like, and you know, like get those ideas to you, like when I don't, like when I'm not home, and I like you have to have really good Wi-Fi to stream, and so I can't just like an upload speed to make videos and things. And so like when I'm not home or something like that, and there's activity going on in Bitcoin, so that's something that I want to get into. But we just have such a small community. I feel like we have a strong community, but it's not like we just need like a little more like of a community to get a trading group together. But I really do, I listen to what you guys say, and I really do like where a lot of your guys' heads at, like with your questions and your ideas to the chart. So I feel like we're not just working with like the absolute like newest people to the space. Let's see. This guy is saying that there is some divergence on the RSI on the doesn't show the time frame. I don't know what TF he's on, time frame he's on. Is this the hourly? It looks like possibly something like the 4 hourly. I mean, I don't want to guess, but he's not showing me in his picture the time frame. This guy finally puts the time frame. This is a different guy. What is this guy showing? This guy's showing a consolidation pattern, essentially. Oh wow, he's doing an Elliott wave. So he's basically showing 3 impulse waves, um, something like this. So this is quite interesting. So I haven't really gone over Elliott wave too much on the channel, but essentially first impulse wave, second impulse wave, third impulse wave. So yeah, I mean this is valid, and essentially he's lining that up with Fibonacci retracement. So this is quite like advanced, potentially for somebody that's newer, but potentially his measured move is something like 56,000 to like 43,000, essentially going off of these wave patterns. And it looks like the idea is relatively negated. There's a lot of price action that nearly invalidates the whole thing. And when you, in Elliott wave, when your patterns are being invalidated, essentially, you have to start over your count. So not like a super clean Elliott wave. This guy is talking about the double bottom that we were talking about earlier. Wow, what time frame is he on? 4 hour. Nice. Alright, so you would go to the 4 hour. I don't even remember what time frame we were on when we were looking at this idea earlier. Let's see. Oh, so yes, right here. I think we might have to zoom in to some higher time frame, or some lower time frame. I just got a Bybit announcement that said, yeah, I need to zoom in lower, that said open interest is high, so basically more volume is returning, which is what we want to see in the charts. That was the two things we were looking for, was confirmation and then volume. Yeah, I mean, this double bottom that we had ended up playing out in the measured move for it, and then essentially, let's see, potentially something like this could potentially be a relatively decent double bottom. So you come in like right here, and I was talking about this earlier, and I said I didn't really like this idea, but the fact that if you take this right here as the start of it, or you know, right here potentially, and start the pattern like this is the first bottom, and then essentially this right here as the second bottom, that looks relatively decent. And that seems to be the idea that he's also talking about, with potentially this being the neckline. He doesn't have that, but he has the more advanced trading signals where he essentially just has this. Let me draw it. So you have this right here, and then on his chart it just looks like this. And this is essentially showing one bottom, two bottoms, and then if you really wanted to decorate, lower, low, that's an L, and then higher, low. Then this could possibly be a head, possibly, but probably not. But something like this is how you draw. More professional, more subtle. This is like how we trade a lot in the group. Like, you know, I sort of more so draw the idea so that you can see it better. Because I don't know like what the levels are around here, and I kind of want my TA to be readable by anybody in the community, regardless of your level. You know, everybody starts out somewhere, and like if you follow the channel, you learn. You know, you see me do the TA, like you're gonna learn it eventually, and you know we'll go over like all the different Elliott waves and all of that stuff. But really, I want to start elementary. Some people say Elliott waves elementary, but like for crypto, this is kind of the nice. Bearish engulfing, holy crap. Oh, nice. Okay, yeah. So on the hourly, we got a close. So we have this, and then we have the close right here on the hourly above this consolidation pattern. Is that what we were looking at? I believe so. 15. And did we just set a new higher high? Oh, we're right next to it. So yeah, we have this close all the way on the hourly, which is starting to be relatively substantial. So most people trade on the 4 hourly, And then we just want to see an increase in volume, which, yeah, is what we want to see, but we're not seeing right now. But you could definitely argue that this is just consolidating into this trend line right here, and then we'd be looking for a bounce to continue higher, or if not, break back into this trading channel, potentially. This is my first time using the, I don't know if my, it takes a lot of energy to stream. I don't know if it's still good. Okay, it's still good. Still consolidating. It is technically consolidating down on the buying pressure, but the selling pressure is also consolidating down relatively. It's on the 15. Let's go down more. This dot right here, potential top. It's on the 15, so relatively significant, but again, market cipher doesn't necessarily factor in these trend lines that we were talking about earlier, so definitely love to see that. Alright. Wow, that's nice right here, that we could potentially have this so this is a support and resistance calculator, and I think something like this where you have support and resistance along with trend lines, along with VPR support, along with market cipher, it's pretty difficult to find something better than that. We're mixing like all the TA with all the best indicators and tools, and so let's see. And this is a pretty relatively good code that was written for potential support and resistance coded in. Like consolidation, essentially, doji, essentially. And again, this is not really relative whatsoever. The price action does not seem to really respect this line right here. So I mean, it breaks right through it, breaks right through it, breaks right through it. And I mean, relatively speaking, I mean, if it broke through it, 1, 2, 3, it's probably broke through that one too. I'm nearly sure because I was very precise in writing the trend line so that this TA could be relative and like precise. Let's see. Just saying this is a top right here on the 1 minute. Again, 1 minute, take it with a grain of salt. They can't factor in this right here, Yeah, it just looks like consolidation. Yeah, consolidation seems to be, I mean, this is on the 1 minute, but consolidation with the, a trend towards the downside. Let me see if there's anything else in the trading group that they're talking about. Volume increasing. What chart are you looking at? Somebody said volume increasing. I'm not seeing it. Yeah, I don't know, dude. Nice. Yeah, I mean, that's just consolidation. Let's see if there's anything else in the group. Yeah, they're really perpetuating this idea of like the double bottom. They're justifying it with some bullish divergence on some of the higher time frames, like the 6 hour, like RSI, MACD. Yeah, it looks like it's consolidating right now. Ask me questions before I go. If you have any questions, just let me know. Let me answer them real quick, and then it's just consolidating right now, and everything looks very good, relatively speaking. I mean, possibly another bounce right here, who knows? But um, even if this idea does get negated, we still have the potential to find support at this area, and then slowly move back higher, and yeah, I mean, we're looking good. And we've negated a lot of the bearish ideas on the charts. So, I mean, we're in an uptrend right here on the micro, and we could possibly be. So we just got to see what we're working with, what highs we're going to break. Alright, let me know if you have any questions. Let's see, let's go to the 1 hour chart. Let's go to the 4 hour. 4 hour. Yeah. Alright. I'm about to head out, but you guys got all the ideas, I pretty much broke down all the charts and talked about a lot of stuff, so I think I've been streaming for probably 3 or 4 hours. I'll come on later. Where is that idea? Yeah, it's right here. So maybe some resistance right here. I'm gonna take that off. I was kind of clowning when I said that was like, I was just not really clowning, but I was trying to show you guys the idea. Really, this wouldn't be a valid shoulder. This is more so than anything else. So sort of like a support resistance type deal, where you come down, you find support, right here, find support right here, find support right here, come back down, break through it, and then potentially find support right here again before moving higher, something like that. is more so what I see in these patterns. And then again, that's that double bottom idea potentially. You know, first bottom, second bottom, neckline right here, right where that candlestick body ends, and then potentially breaking that and closing above it, and then seeing volume for continuation would drive us up to at least, again, volume confirmation. You know, we're consolidating, so we want to see volume confirmation. Would drive us up to at least this upper band, which is really what we're looking at for that potential. And well, this idea right here, it looks like we broke through it, which is good, and then potentially this area right here around 36,000. Well, it'll probably be, what is this? Let me zoom in so I can give you, it's nice like on here I can measure, so let me measure real quick where we would potentially be testing these upper bands. These are relative, you know, all these different trend lines, but really this is the one that we're mainly focused on, something like 35,850, 35,724, and then potentially, you know, if it breaks through that, then potentially 34,407 to 34,353, something like that, potentially playing out and testing those areas. And we'll see if the Bitcoin bulls can show up and push through it. To me, this looks like a lot of buying pressure. It seems extended, like the point where if it hits these levels, like like we could like slowly consolidate up to these levels and break through them. But I mean, if we just keep going at this rate, we might be overextended as we hit them and then move down. We'll see. Alright, I'm out. I'll be back later, so sub to the channel if you're at all interested. We're such a small channel, like, you know, if you care about Bitcoin price action, things like this, definitely sub to our channel, and then you'll get notified every single time, you know, I'm uploading and I'm live, so that, you know, you can, you know, if there's none of your other favorite streamers streaming, you know, you can get my perspective on it, and, yeah, that's all I got for you guys. But I'll see you later tonight. Not sure on the exact time frame on that, but we'll revisit these charts and I'll update you on what's changed. So